allowed, the same yardstick should hold true for introducing a globally accepted norm, because it may not be in the Indian market may not have the right depth to be able to absorb it in its entirety right now. I mean, I'm sure this has been thought through, but implementation teaches us a lot of things, right? Almost everybody who's come, Anant, talks about this 3% band, as carefully as it may have been chosen, needing to be tweaked for the time being to allow the markets to adjust, for example, but it doesn't seem like it's going to go that way.
No, look, I'm sure SEBI is having multiple conversations, and I'm sure the system as a whole will co-create whatever changes are required to ensure greater participation and greater trust in the ecosystem. Just a couple of points I want to make, Neeraj. Look, you make a good point, and I'm sure your market participants make a good point, that the volumes in the derivative markets, especially on expiry day, are far higher than the volumes in the cash market. Again, I want to emphasize, this is nothing new. Even in the VWAP process, we had a situation, and I remember when I left SEBI in October, I was doing the analysis that time. The volumes that we were seeing in the index option market on expiry day, in cash equivalent terms, was 700 to 800 times the underlying volume in the cash market. So this mismatch that you have, which, by the way, many SEBI officials have spoken about in the past as well, is a matter of a bit of concern, which we as a system have to look at. Now, your second point, just to correct you a little bit, shorting is not disallowed in India. SLBM does exist. The problem is the SLBM, the stock lending and borrowing mechanism, which facilitates shorting, is not really used, because anybody who wanted to short would use the derivative market, which is far more liquid and offered leverage, to do shorting rather than going through the SLBM process. I'm actually hoping that with this cash coming through, SLBM will get a fillip. In fact, I'm told SEBI is working on improving the SLBM mechanism, making it more easier. I'm hoping, therefore, that actually cash market volumes go up. Finally, again, I don't want to presuppose what the people in India want to do. We are a free country. We can do what we have to do. But globally, Neeraj, most contracts in derivatives are not held to expiry. What happens is people either close out their positions or roll over their positions well before expiry. Okay? India is kind of unique in the sense that not only are our volumes in derivatives far higher than the underlying cash market, numbers I gave you, it's also a market where many people carry their open interest into expiry, despite this mismatches. So the risk that we have is quite large, and I would frankly be happier if this imbalance was addressed a little bit and more people, close positions earlier rather than wait till. And this is nothing to do with cash. I'm saying it is a generic issue, even if you're taking cash.
Yeah. No, and I'm sure that, and your point's well made. I'm sure the SLBM norms as well. I wouldn't be surprised if there are reforms on the horizon out there to make sure.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल। बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है? बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत? फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड? 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The gift city in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's
Good morning. You're watching Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Shreyanshi Singh. First up, let's take a look at the top headlines. Bitcoin trading in a range of $64,000 to $65,000. US and UK formalized joint stablecoin framework. Tokenized RWA DeFi deposits tripled to $7.4 billion in the second quarter. And lastly, Moscow Exchange plans standalone digital custody platform. Time now to take a closer look at some of these headlines as well. Let's talk about Bitcoin in terms of the trading range, and you're looking at $64,000 to $65,000 levels on lower volumes. You do have US listed spot Bitcoin ETFs that took in about $244 million, while Ether funds also added roughly $61 million in just one session, the third straight day of net inflows that too. Let's also move on and talk about US and UK regulators, and they've agreed on a shared policy framework for stablecoins and digital assets as a whole, aligning standards for reserves, payments and tokenization across the two markets for issuers and users. It basically signals long-run support for fully backed payment stablecoins and tokenized assets. Let's move on and talk about tokenized RWA or real world asset DeFi or decentralized finance deposits that have tripled on a year-on-year basis. You're looking at $7.4 billion in the second quarter, and the growth largely is driven mainly by conventional financial products, the likes of tokenized treasury funds, multi-strategy funds, and private credit as well. Lastly, let's also move on and talk about Moscow Exchange that is developing an independent digital depository and custody platform for crypto trading and asset storage, with a launch also targeted for late 2026 or early 2027 for that matter. The initiative is emerging alongside Russia's new digital asset framework, which starts taking effect in this September of this year as well, and is intended to really regulate exchanges, depositories, and investor access to crypto. And before we wrap, here's a quick check on some of the changes to crypto prices over the last 24 hours as well. Some bit of consolidation that you're seeing coming in, and that's across the board when you talk about Bitcoin, Ethereum, XRP or Solana for that matter. $63,000 to $64,000 levels remain a key level really for Bitcoin when you're looking at support and resistance zones. For Ethereum, that's at $1,600 and $1,800 respectively. Let's move on and talk about the crypto strategy for the day as well. Here's what to keep in mind today in terms of the crypto strategy. First things first, the market sentiment is cautiously fearful at the moment right now. You do have some of those low volumes that are seen, so that's something that you should be looking at in terms of avoiding taking larger positions, at least at the moment. All eyes are going to be on the imminent US Clarity Act vote as well. So do keep an eye on that. But in terms of two other key events, let's talk about that as well. There's of course the Senate deadline that you have and the US jobs data. So those are the two important crypto events to really watch out for as well. And as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry as a whole. The team is available to really provide guidance and help users make informed decisions. And that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani, and with me is Puneet Zaveri, and this is a show, of course, that gets all your stock-related queries answered. Let's take a quick look as to how the markets are doing at the moment. The Nifty 50 is tad bit under pressure, down by about 0.3%. 24,400 levels is where we are sitting at right now. It'll be an interesting session to watch out for today because it's weekend, and we'll have to see whether we close below the 24,600 levels or we're able to manage to surpass those levels or not. But some stock specific names that are putting pressure on the Nifty, especially the Bajaj twins, because both of them are seeing profit taking in trade today. Trent is the other one which is down for that 2% despite of brokerages being constructive on this one. It's taking a knock. Shriram Finance is the other one that's seeing profit taking coming in. Geo Financial Services also seeing profit taking coming in. But on the flip side, you have names like TCS, which was in the red yesterday significantly, is now seeing some buying action up 2.3%. ONGC is the other one which is also up 1.5%. HCL Tech is up 1.2% as well. Tech Mahindra also doing fairly well. So IT names are again back in action today. Some auto names like Mahindra and Eicher Motors are also doing well, and you also have consumption names like Nestle and HUL also slightly in the green. But let's try to pull up the Bank Nifty and see as to what are the levels we're seeing on the Bank Nifty, because yesterday we did try to cross the 58,000 levels for the Bank Nifty, but we have slid back again, down by about 0.4%, mirroring the Nifty 50. 57,800 levels is where we're sitting at for the Bank Nifty. Let's try to pull up the mid cap 150 and the small cap 250 quickly. The mid cap 150 in the green, doing better than the benchmarks, but the small cap 250 today is almost flat, but off from the day's high point as we speak. So broad end of spectrum not looking very strong as well, just the mid cap 150 outperforming versus the benchmark. So that's with regards to where the markets go. But Trans Trade Lighting is the one that we're putting spotlight on the back of numbers. To discuss as to how things have shaped up in the quarter, what the order book execution is looking like, we are now joined by Randeep Narang, who is the Managing Director and CEO of Transrate Lighting, joining us now. And Randeep, thank you so much for taking out the time. Mahima this side, I think I'm going to start by asking about the order book, because around your order book now sits at around that 16,000 odd crores, and versus that of sequentially in last quarter it was sitting at around 16,300 odd crores. So does that mean that despite of over 1,000 plus order wins that you've seen this quarter, the slippage that you've seen is on account of execution, or is there something else that we need to watch out for?
So actually, there is no slippage. We are waiting awards and the announcement of awards. We bid for around 20,000 odd crores of orders in the last quarter, and we are waiting those results. So it's a delay because normally it takes 3 to 4 months to get to know the announcement of the award. So we will definitely have opportunities to shore up our order intake in this quarter.
Narang, a very good morning to you, sir. Thank you for joining in. It's Puneet this side. So when I look at your order inflow for almost 1,000 crores this quarter, 63% coming in from the international side, and I'm sure these were bid and looked at very aggressively in the last few quarters. But how, where has the distribution come from? The question being because we've seen the geopolitical crisis in the Middle East. So I just want to understand, where is that order inflow coming from? And how much is that price and cost escalations built into those orders so as to secure your margins going forward?
So firstly, we don't bid if we are not sure and secure about our margins, and we cost it accordingly. So these are actually very healthy margin projects we have won, both in international and domestic. And principally, we have bid for around 20,000 odd crores of jobs in the last quarter, and we are hopeful that we will get 10 to 15% of this fructifying for us in our favor in this quarter. So the order book will be balanced, both domestic and international. We are looking at a 50-50 ratio going forward for the year.
Would that be, Mr. Narang? Is this more GCC, rest of Asia, Africa? Where have the international orders inflow come from for this quarter?
Yeah, basically Africa, and then we're talking about in GCC, Jordan in particular.
Okay.
Randeep, in terms of your margins, because you've slightly done better versus what you've guided for this quarter, but for the whole year, where do you expect your blended margins to be at? That's one. And with regards to the overall order book that we were talking about, in terms of you've said that there are some order delays that have happened, but going forward in FY27, what is the exact inflow of order or any estimate that you have in place as to what is it that you're expecting in terms of order inflows for FY27 as a whole?
So I'll start with the last question first. So we're looking at 9 to 10,000 crores of new orders, which will give our unexecuted order book as of 1st April to be around 16 to 18,000 crores. Your second question in terms of the margin guidance, we are very happy to talk about 11.7% EBITDA margin. We had talked about 11%. We said if we can do better, we will definitely try and strive for that. Despite the economic disruptions, the team has done excellently well in terms of the project mix, the execution, and making sure that the margin remains in the vicinity of 11.5% plus. And we are hopeful that we will definitely, for the full year, do 11%, and hopefully, as we have done in Q1, a better 11% guidance.
How much of this order book are you expecting to be executed in FY27?
So we looked at 22% growth over our last year numbers of 6,800. So we're looking at, let's say, 8,000 plus odd crores of revenue, and we'll build another 10,000 crores of new orders. So as I mentioned, we'll be at 18,000 crores of unexecuted order book at the end of the year, and which is basically a runway for 2 years clear for us.
Well, got that, Mr. Narang. Also, Mr. Narang, you know, a lot of your order inflow, almost 88% in this quarter, 92% overall, continues to be from the power T&D space. If you can give us a breakup, how much of that is EPC and how much of that is within the towers and the conductor manufacturing as well, because you have had new greenfield as well as the brownfield plant in phase 1 come through. So if you can give us some overall perspective of that, as well as your plans for utilization of the new capacity. Where is it right now? Where are you expecting it to go by the end of the year?
Okay. So principally, we've got 88% from T&D. The rest is poles, civils. And what we're looking at is this ratio will be maintained. We're looking at around 300 odd to 500 odd crores of product orders going forward in this year. So our mainstay being T&D, 85% will be transmission and substations.
And sorry, sir, if you could just give us the plan for ramping up your. So you mentioned 88% is coming in from the power T&D side. So does that include the towers, or is that reported separately for you?
No, it's including the towers, that's part of the T&D business.
So the question largely was, Mr. Narang, that how much of it is within that manufacturing vertical of yours in the power T&D side for your current order inflow, and how much of it is EPCs, and for the margins for both, are those like to like, or do you have more margin cushion in the manufacturing side of things?
So predominantly, most of our tower manufacturing gets into our EPC business. Around 85% is EPC. We do composite turnkey jobs as we bid, and towers and conductors come as part of our backward integration, which is very robust and unique, including monopoles. Now we're looking at product sales around 3 to 5%, which is what we are targeting in our towers and conductor category, which is what will help us to look at planned growth and with healthy margins. Now, the margin profile actually remains pretty similar in both. We are looking at decent margin in the level of the EBITDA margin we've just achieved. So both product and EPC are similar in nature.
Okay, all right, Randeep, thank you so much for taking out the time and speaking with us at NDTV Profit. All the best for the rest of FY27.
My pleasure. Thank you for having me.
Thank you, sir. Let's move on and let's start taking your stock-related questions. And viewers who are tuning in, you can either give us a call or send us your queries on the WhatsApp number that's flashing on your screen up there. And to answer them, we're now joined by Saumil Mehta, Head Alternate Research at Mirae Share Khan, and Samir Dalal of Nakular & Sons Stockbrokers joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. I'll start with the first question, which is coming in from Nanda Gopal, who's writing us from Bengaluru, asking about Angel One. He's got around 100 shares and says that it's given him good returns in the past 2 years. Wants to know if any other peers in the similar space look good to kind of enter into right now. Samir, I'll come to you on this one. What is your view on Angel One, as well as any other peers that you're looking at right now to make an entry into?
So good morning, Mahima, Puneet and viewers, and thank you for inviting me. This space is actually very exciting. Unfortunately for me, Angel One is the one stock that I'm not a big fan of, for the simple reason that they rely very heavily on transactional revenue and not recurring revenue. So there are many companies in this financial capital market space which rely heavily on recurring revenue and moving more towards that, which is the wealth management, the AMCs. And if you can get all of that encompassed in a single entity, then that is something that is exciting. So the two stocks that I would recommend to you from investment perspective in this space, one is Motilal Oswal Financial Services. They have a great alternative business. They have a great mutual fund business, which is growing, scaling up. They have wealth management, which is also doing extremely well. So the recurring revenue side of the business is very strong. And then they have the transactional, which is the stock broking and all of those, which is there. But I mean, that is something that will be okay over a period. But if you ask me, this is the kind of business you want to invest from 3-year point of view. As the AUMs grow, what we will see is the profitability will keep increasing with very limited fresh capital investments in those businesses. So that is one. And the second is 360 ONE. Yes, the valuations are a little bit on the higher side in 360 ONE. But if you look at the alternatives business that they set up, which is the private wealth, the credit funds, I think there's a lot of growth opportunity there. They are scaling that operation quite well. They also have the mutual fund business, which is at very nascent stage, which will scale up. So I think that is one of the plays that you can make. But yes, the valuations are expensive. Wait for small corrections, and then you can probably enter it.
Got that view, Samir, and welcome to the show. But next question is coming in from Jaydeep, who's from Mumbai. wants to know actually about Transtrail Lighting. We were in conversation with the management. He's bought these shares at 690 and he's bought considerable amount of 2,600 shares. So currently he's sitting at a loss. Wants to know if he should continue to hold. Samir, you heard the management as well. Now we just had the conversation on the order book. It's giving them a good visibility as well. Stock's not performing though. It's underperformed in the last 1 year, down almost 40%. What do you make of it, and what's your advice to Jaideep? Should he average down since he's bought it at elevated levels?
So yeah, I mean, one of the things that he can do is averaging. So we remain very constructive and positive on the entire EPC for the power T&D space. We think over the next few years, as more and more of these solar grids get put up, these wind grids get put up, what you will see is the requirement for further T&D operations, and that is where all of these companies will come into play. Now, if you look at it, the entire space has got butchered. KEC, but KEC has international orders. Then you have Transtrail. Then there are multiple companies. Skipper. They're all down who are doing this T&D business because these are EPC businesses, and EPC businesses sometimes they say don't command very high PEs. But if you look at the price to earning multiple on a trailing basis, I think it's trading at about 13 times, which is relatively cheap. So downside risk from here seems limited. If they are able to scale up their order book and get further growth going, I think this stock has potential to move up to 550 to 600 in a year and a half. So you can average, but definitely hold on. If you don't want to average and want to look at something outside of EPC, you can definitely hold on to this one. I think there is upside.
Okay, all right. So that's the view on Transtrail Lighting. The next one that we have is coming in on Cyient Limited. Venkat from Hyderabad has bought the stock at the levels of 1264. He's got around 190 odd shares. But slightly from a long-term perspective, Somil, how do you see the charts for Cyient?
Good morning to everyone. My view would be positive on Cyient in the very short term. I would be expecting the short-term trend to continue towards 1000, which is very close to 200 daily exponential moving average. And once it closes about 200 daily exponential moving average, probably I'll be expecting more confirmation on the medium-term side. In the very long term, we've seen a very sharp correction overall from the levels of 2400 towards 800. So I think there's a meaningful correction, and now it's been consolidating around those 800, 850 mark. And I'll be expecting this consolidation to break on the upside. So I'll be positive in the short term, but wait for the medium term, confirmation about 200 daily moving average, and then add more.
All right. Okay. So that's the view coming in on Cyient Limited. I think we've got our first call for the day. Manav is calling us from Gurugram. Manav, a very good morning to you. Go ahead, ask your question.
Hi, good morning to everyone. So today I have query on Britannia. So I've been holding these 10 shares of Britannia for the past 2 years at an average price of 5,800. The Q1 results are also out. So I was thinking to, if I could average at the current point, I am ready to hold on for more longer period. I have no intentions, to, get off the table for this one.
Okay.
So would it be advisable?
Okay, got it. Got your question, Manav. I'll take this up with Samir. Samir, overall, I think the reason as to why the stock is seeing that uptick is because of the volume number that's come in at that 9% mark, right? And overall, even in the commentary, they have suggested that as of now, the demand is looking positive, but going forward, they're not promising anything. But, from what I gathered from the call was that it was a little cautious approach that they're taking. But volume number definitely has come in as a surprise. What do you make of Britannia numbers, and do you think that Manav should continue to hold and maybe add more?
Yeah, so Mahima, you're right. The 9% volume growth is what excited the market, right? And they are also right in saying that we can't promise anything. Why? Because B2C business is consumption. If consumption slows down, it can affect their business, right? Of course, they are FMCG, so it's not as discretionary in nature. But there is increasing competition from this space. Now, the simple reason why Manav has unfortunately not made a return is he bought it 2 years ago at very high valuation multiples. And this is a risk I always keep discussing with you all on your channel whenever I get an opportunity, that you've got to buy a good company at a good price. You can't just buy quality at any price, right? This is a quality company. There's no questions asked about it. FMCG growing the depth, growing there. depth of products also, so diversifying their base. But when you paid 2 years ago, I think the stock was at 65 or 67 times earnings. You were never going to make that kind of great money because at some point rationality does hit the market, and look, valuations have corrected down. Now, even at this current valuation, I think it's trading at about 44 times current year forward, which is not cheap in any way, but it's more or less in line with a lot of the other FMCG players. So unless they can get their act together and ensure that the growth continues, I don't see the stock performing too well in the next 1.5 years. The one counter, again, valuations are mad expensive, but on corrections, I would recommend is Nestle, because they are adding a new category, then adding new products within their basket. So not only are they going to get volume growth, but as they add more products, that part of the business, because they have the same distribution reach, which they're going to utilize, can lead to operating leverages and profits growing. So Nestle closer to maybe 1400 if you get it, or 1350, 1400 would be the one I recommend. But in the FMCG space, I still am a little concerned with valuations. The one stock which stands out purely on valuation, but because of the cigarette business is going slow, is ITC. I think that is one company that valuation comfort is there, but we got to see how the growth in the cigarette business goes. The FMCG business continues to do extremely well.
Got that view. And we pulled up the 1 week chart for Nestle. That dip that you saw was because of commentary post in that analysts, as well as the conference that they held this week. So post quarter one, actually very strong results. You saw that up move, but then the dip that got bought into actually very quickly, just in a couple of days, was following through that one as well. But let's go across to Bengaluru now. Kumar is dialing in for a stock related query. Kumar, very good morning. Welcome to the show. What's your query?
Yeah, hi all. Good morning. I'm a fan of Fast Profit program. Every day I'm watching. So I have bought a KEC International shares at the rate of 467 rupees. I am holding 220 shares. So a few days back it went up to 530, 545. Now it is oscillating between 467 and 480.
Right.
So can you tell me whether I have to hold or exit, because I am planning to move to some other one? It's like Sona Comstar. At what price I need to enter into that price?
Kumar. Well, Kumar, Sameer did address it a little bit while we asked him the question on Transtrail as well. But Sameer, I think you spoke about the first half of the question on KEC. But what's your view? If should he switch out now, or should he wait on and probably deploy some other capital in Sona BLW as well? What's your view?
Unfortunately, short-term trades we don't give. But yes, from a longer-term perspective, KEC International is a buying opportunity. They have a lot of orders from the Middle East, which have slowed down, right? The operations and the execution of that, which has hurt the stock, and which is why you're seeing the stock correcting from 1,000 levels down all the way below 500. We believe that in the next year and a half, all of these orders will see an uptake and things will recover and the stock will move up. But to give a 1 week call or 2 week call, I think it's better you take the technical view. Fundamentally, very positive. Technicals, I think from a short-term perspective, it's his call. Sona BLW, unfortunately, has run up too much, too fast. I love the company. I think it's great. It was great at 550, 600, not at 800.
That's the view coming in on KEC International. The next one that we have is coming in on Dalmia Bharat. Savita from Hyderabad is holding at the levels of 350 and wants to know the short-term target on this one. Somil, sugar stocks were in action, just on Monday, Tuesday or so, and then there was profit taking that came in the last 2 days. What do you make of Dalmia Bharat? Because this is one of the stock that was the top gainers in the space.
Yeah, I'm positive on Dalmia Bharat overall in the medium term, in the or long term. Very attractive levels at this point of time. It has taken support around 1600, 1700 levels couple of times in the last couple of years. So now that becomes a base for this stock. Now confirmation will only come above closing above 1900, 1910 levels, which is the 200 daily moving average, and a break above the monthly highs as well, previous monthly highs. So I'll be watching out this stock, only entering above 1910 levels. So right now, avoid this if you can. However, if you want to enter above 1910. If you are holding into the stock, keep a stop loss around 1700 levels, which is a previous swing high. Keep a stop loss around there and you can hold on to the stock.
Got it. Well, Somil, we'll let you go on that note. Thanks so much for joining in and giving us your views. Viewers, a very short break. Come back and get some perspective on Akasa Air and then we'll start the rapid fire round. Stay tuned, a lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
Welcome back. You're watching Ask Profit here at NDTV Profit. A quick look as to how the markets are looking like at this hour. The Nifty 50 is trading around the 24,500 levels. Slight 5 points uptick is what we've seen since we last talked about the markets. But like I said, if we're able to cross that 24,600 levels, then it will sure be a positive one going forward. The Nifty Bank is trading around the 57,800. Here also, I think the crucial levels to watch out for will be 58,000. The mid cap 150, although is doing very well today, up by about 0.3 odd %, but the small cap 250 is turned into the green now, up by about just 0.06 odd %, but has recovered. But you know what? Profitability over market share, that's Akasa's mantra as it scales up operations. In a conversation, in fact, with my colleague Hiral, CEO Vinay Dubey says the airline remains well capitalized financially ahead of plan and focused on long-term growth rather than chasing market share. Listening.
Our view is if we continue to grow in a disciplined manner, we will get to profitability. And I'll tell you, in the 4 years that we have been in operation, our financial metrics have gone not just on track, but perhaps a little better than track. And so we're very pleased with the way we are progressing and very happy, with what the future has to hold for us.
In terms of the scale as well, if you have to look at operations, right? The number of aircrafts that you already have right now, and you have put out a number in terms of where you would want to reach by 2032.
Correct.
Would it be right to say that with the fleet that is going to get onboarded, that's the scale so far that you're looking at? Because if I have to look at the IPO also, which is 3 to 5 years, it somewhere just matches those two timelines.
That's correct. So we have 40 aircraft today. We've got 186 more on order between now and 2032. And by the way, 2032 is not that far away. And I can also tell you that the pace of delivery is only growing. So you can do the math in terms of, how large we're going to be in 2 years, 3 years, 4, 5 years. It's going to be a sizable airline. In fact, I think, in the early 2030s, we will be one of the top 30 airlines in the world. So we will have quite a large scale in terms of aircraft size, and that's super exciting.
Taking the current scenario into consideration, yes, there are challenges for the industries. And it's not only aviation, right? How important is liquidity as an aspect from a business perspective right now for you to actually prioritize on your expansion plans? And how are you generating that liquidity within your system right now? Is it becoming simple to raise funds, and is it your existing investors who are helping you do that?
Yeah, sure. So I'll say that, you know, when we talked about our strategy, I had 5 pillars: service excellence, cost leadership, employee centricity, world-class safety, and to be well capitalized, right? So being well capitalized, which means having adequate liquidity, has always been and will always continue to be an important element of our strategy. The other part, and this is not my wisdom, but this is worldly wisdom that says, please don't raise money when you absolutely need it. Raise money well before you need it, right? And that's been our philosophy, that's been our ethos, and that's what's going to allow us to get through the ups and downs that are inevitable in our business. I will tell you, given that we have announced Akasa Elevate, and we've announced it on the 7th of August, we're still in the midst of, you know, the Iran war, which is not settled.
Yeah.
To think that that's been our focus over the last 3 months gives you a sense of our liquidity position. We're not running around focused on liquidity today, we're running around focused on our business.
Well, that was the management of Akasa. You can catch the full conversation at 11:30 a.m. only on NDTV Profit. But let's now start the rapid fire round. We of course have Sameer Dalal. Let me also welcome in Devin Mehta, Manager Technical and Derivative Analyst at IDBI Capital Market and Securities. Devin, welcome to the show, as well as Sameer. You both know the drill. Let me first go across to the first question on BSC. Rohan from Bengaluru holding shares at 3,600. Sameer, would you recommend him if he wants to add more? Is this the good price to do that?
No, I would say any rally you get a chance, sell.
Okay.
The next one that we have is coming in on Ircon International. Soumyan Mukherjee is holding 100 odd shares at the levels of 63. Says he's a long-term investor. Sameer, should he continue to hold?
No, don't stay invested. Find other companies to invest in.
RK Developers, Ramesh from Bengaluru is holding these shares at 140. Devin, he wants to know if he should continue to hold.
Yeah, one can hold with a stop loss of 135.
Okay, Mopen Labs is the other one. Mr. Reddy from Hyderabad is holding 2,000 shares, bought at the levels of 55. Devin, what are the charts indicating for this one?
I think exit on bounce.
Restaurant Brands Asia, our viewer Mohit is holding shares at 106, which he bought a while ago. Wants to know, Sameer, if now is a good time to average. We had a good update come through from the company. What's your view?
Yeah, so it's an add for me. Unfortunately, it didn't average it at 60, but yeah, you can add it. I think the longer term perspective is for the QSR space is extremely strong.
Okay, the next one is on pharma. Which is the best bet right now to kind of enter into in this pharma space for the next 2 years is what our viewer wants to know. Sameer, any particular pick?
For me, so I would say Sun Pharma.
Got next one's on Devyani International. Lalita is holding shares at 118. Devin wants to know a target and a stop loss.
I think one can hold with a stop loss of 115 the low side. We can see a target of around 137 in a short term.
Lenskart is the other one. Devin Venkatramani from Bengaluru has bought 50 shares at the levels of 525. Continue to add more, hold, sell. What's the 6 months outlook?
Hold. I think hold with a stop loss of 530.
Sriram Raghuraman, who's a senior citizen and a regular viewer of the show, holding shares at 368 of Honasa. Sameer wants to know a 1 year view of the counter.
1 year will be flattish. Nothing major on the upside.
Kalyan Jewellers is the next one. Ashwini from Chennai wants to know the short-term target on this one. 3 months is her time horizon. Devin, the stock has already climbed to 620. 830 is what the Jeffrey's target is, but what is the view on the charts?
Hold. I think on charts, 790 is the immediate next target for next 3 to 6 months.
Wow, 790. Interesting.
Excite is the other one. Our viewer wants to know about this particular counter. He's holding at 517. Devin, what should be a short-term target for him?
I think hold. The next target is around 530.
Okay, Bank of Maharashtra is the other one. Our viewer is holding a large quantity, 26,500 odd shares at the levels of 75. Wants to know if whether should partially book profits or continue to hold this one. Devin, on the charts?
On the charts, I think one should try to book profits as it is moving downward.
The next one's on Cohance Life Science. Our viewer holding shares at 550, so slightly elevated levels. Sameer, we've seen a management change there, but a horrid Q1 number. Should she keep the faith? What would be your recommendation?
Yeah, absolutely horrid. But they said this is the worst of the quarter, so hopefully things turn better. Look, if you want to look at it from a 1 year perspective, I think it's going to go to recalibration. But longer term, 2 years, I think it's definitely a buy.
Okay, the next one is on ITC Hotels. Swati Narayan is holding 285 shares at an average price of 176. Continue to hold from a long-term perspective, Sameer?
Absolutely, hold on and buy more.
Next one's Union Bank. Venkatesh bought the shares actually at 48 rupees. So way back, probably post that COVID era. He wants to know what he should do with his 145 shares, Sameer.
Book profits and get into another bank or private sector. I like IndusInd and IDFC, which I've been saying on this channel multiple times. Do that.
Okay, the next one is on Hero MotoCorp. Rajiv Mukherjee is bought it at the levels of 4880. 100 shares is what he's holding. Continue to hold or wait till the next quarter to book profits considering the numbers. Sameer, what do you make of Hero MotoCorp?
Hold on for dear life.
Next one, SBI Cards. Our viewer Ronak bought it at 650, Deven, and he wants to know what he should do for the next 1 to 3 months.
I think hold with a stop loss of 630. It can reach higher towards 700 level.
And what about Nykaa, Devin? Neelam from Jaipur is holding 140 odd shares at the levels of 241. Targets for the next 1 to 3 months and even stop loss.
Hold with a stop loss of 310. The immediate target is 350. Above that, it can move towards 375.
Narayani from Coimbatore is holding on to Aditya Birla Fashion, roughly at around 74 rupees per share. Sameer wants to know what she should do with her over 2,000 shares. Is there a possibility of a turnaround similar to Trent as a question? But I'll let you take the answer for this one.
So I hope it's not a similar turnaround to Trent because Trent stock has actually just gone down. But having said that, we've been very hopeful that ABFRL does turn around their business operations. They have a lot of in-house brands which are showing this traction. But the profitability is not coming through, right? So that is the bigger problem. Once the SSSG starts picking up and if they can get some sort of base like which Trent has of cult base kind of buying, I think ABFRL also has scope.
All right, okay, so that's the view coming in on ABFRL. But that's the end of course, the rapid fire round, and Ixigo is what we're putting spotlight on. Let's try to pull up the stock and see as to what it's doing, because overall, this quarter has been a resilient one, but margins is where we've seen a slight impact. Though revenue was up by about 13%, margins were at 6% to kind of understand, because a lot of money that the management is making from the OTA part is investing into hotels and AI. To kind of decode more about this, we're now joined by Alok Bajpai, who's the co-founder and Group CEO of Ixigo, joining us now. Alok, a very good morning to you. Mahima this side. My first question to you is going to be about this fact that, you have mentioned that whatever operating leverage that you're making, out of the OTA business is what you plan to go ahead and invest in the hotels and as well as the AI part of the business. Just want to get more sense in terms of how this is going to play out for you, and when is it that investors can actually expect in terms of this hotel business to start making money as compared to versus what you're actually investing into it. What do you make of that?
Yeah, hi Mahima, thank you for having me here. I think if I just step back and walk through our story, Ixigo has entered every category very thoughtfully, right from the time when we got into trains and then into flights and buses. There is a phase where we understand the market, understand the consumer needs, understand what the supply wants, and then build out our product, enhance our supply capabilities, and build our peace of mind stack on top of the core product. And typically, if you look at the journey, whether it was on train or flight or bus, the first 2 to 3 years, we build out, we invest, we create, we grow, and then the product hits critical mass, operating leverage starts coming in. And I think from that perspective, hotels is the one where the gestation period typically for any OTA is longer because building out the supply takes longer. And also, there is no product market fit that any OTA has actually discovered yet in India on the mid market or budget side. And that's why the penetration of online, if you look at 3-star and below, there's a less than 10% penetration the moment you go towards the long tail. And overall penetration in the overall online hotel category is still around 15, 17 odd percent. And therefore, there is still a lot of potential for OTAs to come in and create that market, right? So our thesis is that we will end up creating, and that's what gives us the right to win over the long term, because we have 85 million monthly active users. We have almost half of the internet population in the country using at least one of our apps once in a year. ixigo, Confirm Ticket, Abhibus, and these apps are growing. We have $2 billion of tickets that we sold last year. The GTV for buses is still growing at 39%, for flights growing at 27%. So I think there's a lot of cross-selling, upselling possibility within our ecosystem. And that is what makes us believe that this will not require as much burn as it used to. Let's say take 10 years ago, if a new entrant entered the category, it would need a lot more burn than for a player like ixigo, which already has a very large user base.
Okay, understood. Got that part. But in terms of your train GTV, that has slightly been impacted because of the Tatkal norms that were changed, right? Do you think that this could be just a temporary hit, or do you think that this could structurally impact? I mean, we've spoken about this earlier, but now that we're actually seeing the impact, what is it that you're making of it?
Yeah, so two things happened there. One was obviously the Tatkal timings, but the other was the fact that user verification and Aadhaar authentication was introduced, and that led to some friction in the flows. We are very hopeful of having OTP-based authentication flows soon from IRCTC and CRIS, right? And I can't comment on the timeline because it's not in my control, but as and when we get access to that, we believe that the next upcycle starts there on the train side as well. I think you have to understand the capacity growth on trains historically, over the last decade has been 4 to 5% only year on year. And we already have 63% market share of the OTA market there. In fact, we've gained share. So we were 60% a few quarters ago. Now we are 63. And despite that, we are, margin wise doing okay on that side of the business, where the margins were growing, in a healthy sort of 20s growth rate, right? So I think net, the macros of the Iran crisis are impacting our sector more than any other sector because of the oil prices leading to higher airfares. And you are seeing this, if you talk to the management of airlines, you will realize that they have cut capacity, and therefore, at least for JAS quarter, they are guiding that capacity will be constrained. I think those things are impacting the sector more at this point of time. Otherwise, the long-term story remains intact. The fact that we have a right to win on hotels in the mid-market remains intact. AI, we are investing in the short term, but that's you can look at it as more of a one-off or front-loaded investment. The payoffs of that will start appearing from next year onwards.
Just, one last question from my end. For take rates, especially for flights and buses, that has seen an impact. And this, I'm guessing, is on account of competitive pricing as well as, ad spends probably going up, and also an impact of the geopolitical issue, especially for the flight side of business. But in FY27, do you think that take rates will stabilize for both of these segments, or do you think that the impact could continue?
See, I think the gross take rate on flight is a bit mathematical because it's linked to the fare value, right? Because a lot of the take is in the convenience fee part, and that is fixed, right? So so as fares go up, optically the take rates shrink a little bit. But once the fares normalize, you will see the take rates also normalize there. On the bus side, the take rates have been fairly stable. We've operated in the 11.5% range or 11.7% range, in that range bound manner for the last few quarters. I don't see any major sort of change happening there because it's a fairly stable take rate that we've observed.
Very good morning. Thank you for joining in. It's Puneet this side. Just one question from my side. We've seen your revenues double over the last couple of years to 1,200 odd crores. your profitability has largely remained stable at that 70 crores in the last 3 years. So question being, when do you feel like the 2,500 crore revenue target you can achieve, or the revenue mark you can achieve essentially? Is that something that probably can by FY28 you can do, or that will spill over to FY29? And what's your guidance on profitability as well over the next 2 to 3 years?
See, I think we have to look at a scenario where macros are stable to begin with, right? Because if the flight industry is degrowing as we speak, right, year on year, it is very hard for me to give any guidance on that part of the business, right? It becomes very, very difficult for any OTA. However, if we assume that a double-digit growth rate comes back on the flight market and the OTA market starts growing faster than that, remember, we've been the fastest growing OTA across the lines of business we operate in. So our aspiration is to maintain that momentum. Right now, we are fighting the tide in some sense as to what's happening on the macros. But if the macros improve, we will come back to trajectories that we were at, let's say, a couple of quarters ago, right? And that is going to be very visible, once the hotel story starts playing out over the next few quarters. We've already called out 500,000 heads on beds that happened last quarter. And we will soon, at some point disclose more information about how the hotels business is building out. But we are very confident about gaining share there and growing materially there. Revenue guidance, we don't typically give, but what I can tell you is that on the GTV level, our aspiration remains to be the fastest growing OTA in the country.
Alok, thank you so much for taking out the time, and all the best for the remaining FY27. Viewers, that's of course the management of ixigo. Let's try to see as to where the stock is trading at right now, down by about 8%. Is certainly under pressure. But let's again start taking all your stock related questions. The next one that we have is coming in from, I don't think if we've taken this. Okay, we've not taken this. Nagaraj from Hubli is holding 500 odd shares at the levels of 345 of Cello and wants to know whether to continue to hold this one or exit from a long term perspective. Devin, I'll come to you on Cello. What do you make of the charts for this one?
No, I think one should try to exit on bounce. It has a resistance around 400 and support is placed at 350. So try to exit on bounce.
Samir, do you have a view on Cello? We actually had the clarification come from the company, right? They're not looking to sell out at this point of time, responding to media reports. But just everything that has been going on with the underperformance, any view on the counter?
This one we don't have under coverage, but we believe the discretionary spend, the space that they're in, is something that will grow. I haven't covered this company, so I don't know what the difficulties they're facing or anything. But I think this, if they can get their act together, this is a space that's going to grow. So just focus on whether they can get something going.
The next one's from Shobha, who's from Bengaluru, holding on to Motherson Sumi. Devin, she's been holding at 129, currently sitting on good gains. Wants to know if she should continue to hold based on the charts.
I think hold. Overall structure is positive. We can see stock moving towards 180.
Okay, all right. The next one that we have is coming in on L&T Finance. Vijay from Chennai wants to know the short-term targets on this one. Devin, I'll stick with you. Stock is down 2% today, but what do you make of the charts?
I think overall structure is positive. One can hold with a stop loss of 298. We can see again a bounce back towards 330 odd levels.
Correct. The next one coming through, and this one's on Gabriel India. Our viewer, George, has actually bought the shares at 415. So probably before you saw those unlisted companies come into the listed ones, stocks trading at almost 1500 odd. Samir, we've seen a second round of that happening, right? In this quarter, 2 more companies got added into the listed entity and a big target. Would you recommend George to just ride that wave? He bought it at very attractive levels.
Honestly, I find valuations receive. I'm not denying the fact that all these companies got merged in. And, even at 1200, if you remember, I don't know, we may have spoken, I said I'm not convinced on the story. So I continue to remain of the view that this is a sell right away, not even on rises. There are far better companies with more growth that you can invest in. When you merge businesses in, you're also ensuring that, look, the profitability of those entities is becoming one. But that doesn't mean the entire pool of profit is going up, which means the share to shareholders as well. So keep that in mind and just
Okay, all right. Okay, I think Samir's video is stuck, but we'll get to him again on Gabriel. But the next one that we have, I think, is coming in from Prashant. Is Samir back? Okay, he's back. Samir, if you want to complete your answer on Gabriel.
So I was just saying, look, the profits get distributed amongst the new shareholders as well, right? So from that perspective, I think it's an avoid at this point.
All right, okay, so that's the view on Gabriel, but it's time for a rapid fire round. Samir and Devin, try to keep your answers as short as possible. The first one is from Prashant, who is asking about CG Power. He's holding 55 shares at the levels of 896. Continue to hold, Devin, your view on the charts?
Yeah, I think hold and try to exit on bounce near 890.
Shakti Pumps is the other one. Satish from Bengaluru is holding shares at 763. Wants to know, Samir, if he should wait on for that the PM Kusum 2.0 to come through, and he's been following the stock. What's your view?
So at this point, it's just a hold, not a buy.
Okay, the next one that we have is coming on Ease My Trip. Raghav from Bengaluru is holding 1500 shares at the rate of around 8 rupees and wants to know whether to continue to hold or exit. I mean, Devin, your view on the charts?
No, I think exit on bounce near 8.
Happiest Mind is the other one. Radhakrishnan has bought it at 339. What should he continue to hold here, Samir?
No coverage on this one, sorry.
Okay, any view on the charts, Devin?
I think hold. There is support around 375 levels. This can move towards 450.
Okay, and what about IRDA? 1 year targets for this one, entry price and the exit price also?
I think one should try to avoid this counter. The overall structure is weak.
Okay.
Got it. Well, Samir, I'm surprised you don't have coverage on Happiest or Seller. You always look at these deep discount bargains. So, what is the rationale for not looking at these ones?
There are too many companies. Sometimes you can't cover all of that, right, Puneet?
Got it. Well, let me go across to the next question. This one is on Kalyan Jewellers. Also, Samir, something we've spoken about in the past. Should our viewer continue to hold? He bought it at 490.
You know, I should be bragging. I remember discussing this stock with you at 400, saying I'm very, very positive on this. Anyways, having said that, I still remain long-term constructive. But in the near term, what's happened is the stock has run up too quickly. So I'm not saying it's going to go up further in the short term. But yes, if you have a 2-year investment horizon, the kind of growth that's going to come from their franchisee business is fabulous. So hold on to it.
The next one is on HDFC shares. Mohan from Visakhapatnam has bought it at the levels of 785. Next 3 months target on this one, Devin?
I think hold. It is trading near very crucial support of 730. I think hold, try to exit on bounce.
Next one's Power Grid. Subrata wants to know right time to buy. Devin, is this it?
Which stock?
Power Grid.
Okay, Power Grid, I think one should avoid this counter buying. We have seen a breakdown below 280 levels, so try to avoid.
Okay, the next one is on Infosys. Is this the right time to add, is what our viewer is specifically asking to ask in the rapid fire round. Devin, what do you make of the charts?
Yeah, definitely. I think Infosys can be added at current levels. Stop loss will be 1110. The target will be 1290.
Okay.
Sundar from Madurai wants to know if he can sell Tata Motors CV and PV right now, Samir, because he wants to invest into Mazagon Dock. Either of those trades that you would recommend?
So I say do not sell either Tata Motors CV or PV. In fact, I have a buy on both of them from a longer term perspective. Mazagon Dock, if you want to add, if you have fresh funds, please do it. But don't sell this to buy that, because you're buying something that's trading attractive versus something that's trading at extremely high valuation.
Okay, GE Vernova is the other one. Vijay from Hyderabad is holding 30 shares at the levels of 4550. Devin, your view on the charts for GE Vernova?
No, I think try to exit on bounce. The overall structure has got weak after earnings.
Got it. The next one coming through, and this one's on Endurance. Our viewer Sushant wants to buy into this counter right now. Samir, would you recommend that Endurance Tech?
No, I wouldn't recommend buying. At best, if you don't have it, don't worry, but find other counters.
What about MTAR Tech, Devin? Our viewers bought it at an average price of 2054. 50 shares is what Nita from Bengaluru has been holding. Continue to hold?
I think hold 6,300 is a good support. Hold with a stop loss of 6,300. This can gradually move towards 7,800.
Got it. The next one coming through, and this one's on HDFC Bank. Our viewer wants to know If he can enter the counter for the short term though, Devin, what's your view?
No, I think as I said, it is trading around the strong support of 730. If it breaches down, we'll see some further correction. So try to avoid this stock.
Okay, then the next one is on Dr. Reddy's. Bought at the levels of 1269. Continue to hold, sell. Samir?
Hold on to it.
Got it. The next one's Indo MIM. Ishwar is holding. He got allotment and now is in big gains. Samir's question being, if not on the stock, would you recommend him to book the profits?
I don't know anything about this company. I didn't study the IPO.
Okay, got it. And last one coming in on Loris Labs. Vipul wants to know at 1100 he's bought these shares. Should he exit in the next couple of quarters? Is his question, Samir, or should he continue to hold?
Couple quarters, yes. If he has longer term, stay put. But couple quarters, given the run-up, oh, definitely yes. Valuations are expensive.
Got it. Well, that was the last question of the rapid fire as well as this edition of the show. Samir as well as Devin, thank you so much for joining in, giving us your views. But viewers, out of time on this edition of the show. Thanks so much for watching. Stay tuned. Lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये लीजिए भाई, मैंने बनाया एक बैठ सकता आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The gift city in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital.
Four years into the skies, someone is actually turning 4. I'm sure you would want to know, guess who? We are talking about Akasa. We have with us Vinay Dubey, the CEO of Akasa, who's joining us in the studio as well to talk to us about what's in store, what's the strategy from here on. Welcome to NDTV Profit, Vinay, and congratulations. 4 years into the skies.
Yes, thank you.
More than anything else, I'm sure everyone wants to know what's in it for the commuters, for the passengers, as a gift for 4 years.
Well, thank you for having me here. Yes, it's been 4 wonderful years, certainly extremely rewarding. We've served just shy of 30 million customers, which we're very, very proud of. On behalf of all of our 5,500 employees or so, we thought this was the right time to give something back. And so on the 7th of August, we will announce the Akasa's loyalty program called Akasa Elevate as a way of saying thank you for all the customers that continue to choose Akasa again and again and again. And so that's something that we are really looking forward to.
This is interesting. A loyalty program for the consumers is what you're announcing. What would that actually entail? Because the question is, do we get free flights? Do we get free food? What is the loyalty program going to look like?
You know, it's a portion of everything. That there are benefits in terms of free flights that you will be able to accrue over time. There are discounts on food. There are discounts on seat selections. One is able to get flexibility in terms of changing. So we're, for example, one of the only airlines that would provide our top tier customers with an ability to get to the airport early and without, any expense whatsoever, take an earlier flight should their travel plans change. And these are, some of the unique elements of Akasa's loyalty program. We're also, as we launch this, we're allowing people to make retro claims all the way back to the start of our fiscal year, which is the 1st of April. So that's something interesting. And the other thing is your tier benefits are independent of where you book from. So for example, if you're a platinum tier customer, you can book on any platform and your tier benefits are preserved. So there's some interesting things that we have built into our program really as a way of recognizing people that continue to choose Akasa time and time again.
How big a revenue generator will the loyalty program even be for an Akasa? Because that is somewhere going to be the end game as well. That yes, benefits do accrue to your customers, but something should be there for an Akasa in it.
From day one, we have had the ethos that if you create an experience that our customers like, they will reward you. So the reward is really in developing something for our consumers, as opposed to saying that the loyalty program has to have a particular P&L. That's not the lens through which we're looking at this. From day one, Akasa is an experience-led carrier. Whether you look at the quality of our seats, the USB ports, the larger overhead bins, the quality of our food, the on-time performance, all of this from day one has been fashioned because we know at the end of the day, if you're not providing that experience to customers, no one's going to want to fly you. And so the loyalty program is just a way of saying thank you, as opposed to really, finding some P&L benefits in this. The P&L benefits will come just by winning the hearts and minds and the travel of the consumer every single day.
Okay. So let's leave that aspect aside and then let's talk about what's happening from a business perspective. I'm sure there was a strategy when Akasa came into picture. It's been 4 years. How have you been in terms of the strategy that was planned to executing it with the kind of deviations that would have come your way, right? I mean, because I don't think so there is any strategy that gets formulated which is execution to the T.
Right.
And at this stage, if you were to look at the next 4 to 5 years of your journey, what is that expected to look like?
Sure. So there are, 4 or 5 pillars of the Akasa strategy that were true when we launched and are true today. You're absolutely right. It's not that, we are perfect, and so there are always ways in which we can improve, and we try and continuously improve on that. But the strategic elements, and I'll describe the 4 or 5 pillars of strategy, those we don't think have fundamentally changed today, although we're open to reviewing them periodically. So, for example, we started with service excellence as one of the core pillars of strategy. That very much remains the way we are today. We looked at cost leadership and the business model centered around cost leadership, so we can provide affordable fares for our consumers and keeping our business model simple, again, to with a view to providing affordable fares. Those elements have remained the same. World-class safety is something that is all pervasive in everything that we do, or being employee-centric. That is core to who we are, because it's our employees, our 5,500 employees today, that really are building the company. It's not 1 or 2 of 5 people. And so treat them with dignity and respect and really build this company for them, with them. These are elements of our strategy and ethos that remain alive today. And part of that, in order to sort of execute that, we've also had this view that we have to always be well capitalized through this process, because there are going to be many ups and downs. So these elements remain the same. It does not mean that execution is ever easy. No, there are always things that are thrown at us, but these elements of strategy are just as alive today as they always have been.
You know, but this industry, Vinay, as a whole is absolutely capital intensive. So the question then is, how regularly do you get yourself capitalized in terms of fundraisers? But before we get there, from a strategy perspective, because you will need money, either you raise money or you get it from internal accruals, right? So then the question comes down to, is it going to be profitability that you're going to chase as an airline, as a company? Or is it going to be chasing the market share first, which will then lead to profitability, right?
Yeah.
Because if I'm looking at Akasa, we're still in single digits. I wouldn't say high single digits also, but somewhere in between in terms of single digits.
Right.
And you have competitors who've achieved that kind of market share much faster. But I'm sure there is a strategy in place of the way Akasa wants to do it.
Yeah, so I'll tell you that we're not chasing market share, we're chasing profitability. And it's not that market share drives profitability, it is scale that drives profitability. So you could be a scaled airline. You could, have 60, 70, 100 aircraft and have a 2% market share. Or you could have a 60, 70, 100 aircraft airline and have a 25% market share. These are, and I'm talking, by the way, I'm talking about different countries in different parts of the world. It is the scale that drives profitability more than market share. And that's the reason why for us, we don't wake up every morning and look at market share. So our competitors can grow, at 8,000%. It makes no difference to us. We will continue to grow in a disciplined manner. At the end of that, we'll get scale in a disciplined manner. And at the end of that, we'll achieve profitability independent of how fast or slow anyone grows, right? Because market share is not just a function of your own growth, it's also a function of somebody else's growth. And so our view is, if we continue to grow in a disciplined manner, we will get to profitability. And I'll tell you, in the 4 years that we have been in operation, our financial metrics have gone not just on track, but perhaps a little better than track. And so we're very pleased with the way we are progressing. And very happy, with what the future has to hold for us.
So we've spoken about what you have for consumers. We've spoken about the strategy that you have in place as well in terms of the pillars that you've carried forward. What is most important to you versus, if you have to compare market share versus profitability, where you're saying it's going to be scale, which will help you achieve profitability.
Correct.
3 to 5 years from now, what is that scale that you intend to achieve, which will tell you that, okay, at this scale is where I will hit that profitability kind of number that we want to see?
Yeah, so we don't put out numbers from a scale perspective of number of aircraft, but I can tell you well within that time frame, we'll achieve the right kind of scale to be able to deliver financial
what will
results.
that time frame look like?
For us, I hope it's much less than a 5-year limit. But again, these are not things that we put out predictions for.
Sure.
We certainly say that we want to be listed in a 2 to 4 year time frame. So I'll give you that as an understanding. Obviously, from a listing perspective, you have to have a sense of what your profitability will look like and be able to have a very coherent story for an IPO. So we're well on track for that.
Okay, well on track on that. And in terms of the scale as well, if you have to look at operations, right? The number of aircrafts that you already have right now, and you have put out a number in terms of where you would want to reach by 2032.
Correct.
Would it be right to say that with the fleet that is going to get onboarded, that's the scale so far that you're looking at? Because if I have to look at the IPO also, which is 3 to 5 years, it somewhere just matches those two timelines.
That's correct. So we have 40 aircraft today. We've got 186 more on order between now and 2032. And by the way, 2032 is not that far away. And I can also tell you that the pace of delivery is only growing. So you can do the math in terms of how large we're going to be in 2 years, 3 years, 4, 5 years. it's going to be a sizable airline. In fact, I think, in the early 2030s, we will be one of the top 30 airlines in the world. So we will have quite a large scale in terms of aircraft size, and that's super exciting.
So with aircrafts as well, you have the number in your mind in terms of strategy, but is it going to be sticking only to Boeings because that's what you are onboarding right now? Is there already a plan in place which would say that, okay, if needed, if we have to shift to another player, we are agile enough to shift to another player, and yes, we'll be open to it?
So we're always open to options and alternatives. As of right now, the 186 more aircraft that we have in order are Boeing. We're extremely happy with that. We've got one of the world's most fuel-efficient aircraft. It's a great aircraft for passengers to travel on in terms of not just our configuration, in terms of seats and USB port and bins, etc., but noise levels, pressurization, the quality of the air. These are the most modern aircraft and come with those kinds of amenities. So we're extremely pleased with every aspect of this. At this point, we have no plans to deviate from it. But as you would imagine, every year we will revisit our plans, and if there's a course correction needed, we will be happy to do that. But at this point, no.
Okay. So
plans,
sticking to Boeing right now, happy with that.
Correct.
When it comes to maintaining the business side of it as well, liquidity absolutely important in a business like yours. Now, taking the current scenario into consideration, yes, there are challenges for the industries. And it's not only aviation, right? How important is liquidity as an aspect from a business perspective right now for you to actually prioritize on your expansion plans? And how are you generating that liquidity within your system right now? Is it becoming simple to raise funds? And is it your existing investors who are helping you do that?
Yeah, sure. So I'll say that, when we talked about our strategy, I had 5 pillars: service excellence, cost leadership, employee centricity, world-class safety, and to be well capitalized, right? So being well capitalized, which means having adequate liquidity, has always been and will always continue to be an important element of our strategy. The other part, and this is not my wisdom, but this is worldly wisdom that says, please don't raise money when you absolutely need it. Raise money well before you need it, right? And that's been our philosophy, that's been our ethos, and that's what's going to allow us to get through the ups and downs that are inevitable in our business. I will tell you, given that we have announced Akasa Elevate, and we've announced it on the 7th of August, we're still in the midst of, the Iran war, which is not settled. To think that that's been our focus over the last 3 months gives you a sense of our liquidity position. We're not running around focused on liquidity today, we're running around focused on our business. In the April, May, June quarter, our year-over-year growth was just shy of 30%, right? So we're one of the few airlines that grew at that kind of pace. And in this quarter, given all what's going on in the world, we're announcing Akasa Elevate. Right? So that should give you some sense of what our liquidity position, what our priorities are, and how we're thinking. Always thinking for the long term, always preparing well in advance.
To add to that, let's talk about your international expansion. Yes, very exciting when you talk about international expansion, but in the hindsight, you have to absolutely look at what's happening in the domestic markets as well. And the domestic market, to a certain extent, is becoming fiercely competitive. My question then to you is, how do you decide in terms of your deployment strategy then? Because on one side, you have the excitement of going international. On the other side, you're looking at competition which is just increasing.
Yeah, so I'll tell you, Hiral, competition has been fierce from a long time ago. It's not today. We've got very strong competitors. And by the way, we should. I mean, the country deserves choices. And the country, has choices today, and I hope over time these choices will only increase. So competition has always been fierce. We've launched Akasa to be able to withstand that competition and create an airline for the ages, and that's what we're doing. Domestic will always be the vast majority of what we fly, right? We're incredibly proud. And by the way, the properties that are being built today in terms of Navi Mumbai, Noida International Airport, these are only going to fuel our domestic ambition as well. And so, sure, there's the international element of it, but today it's 25% of our capacity deployment is international. That may go to 30, 35, 40. But the vast majority will always be domestic, proudly for us.
And when it comes to domestic, you're participating in UDAN as well, right? So then how do you manage the balance between achieving that regional connectivity and maintaining profitability on those routes?
Yeah, so I will tell you upfront that today we don't have, a particular route that is an UDAN route.
UDAN route. But you have shown interest there.
We will continue to study it, and we will continue to show interest. As of today, we don't, but I think it's a great scheme from the government. This is, to develop the nation, you need very strong air transportation links. I mean, air transport, any form of transport, this is sort of the backbone of economic growth, and we're very happy to participate in it. But to the extent that it makes sense for us to participate in it, and so we got a highly professional network development team. And this team is always studying where to fly, where to place our assets, and I'm sure over time they'll make the right decisions. Part of that may be in Iran. I'm sure a large part of that will not be in Iran, but we're happy with that.
Okay. The other question, when it comes to looking at competition, etc., a lot of murmurs that we heard about airport operators owning airlines. What are your comments? What are your thoughts on it?
Look, I think India needs many airlines. India needs more competition. We're very comfortable being part of one of 5, 7, 10 airlines. That's what India holds. We've got a mature regulator. We've got a mature competition commission. I'm sure there'll be considerations that they'll keep in mind as they execute it. So we're very comfortable with this. I mean, our view is that as we focus on the consumer, and Akasa is this experience-led carrier, as we add Akasa, elevate to this as a frequent flyer program, these are the elements that we need to compete happily. So we welcome more choices for the Indian consumer.
Okay, but we'll have to wait and watch. Anything that you're hearing on it as to how soon that could happen or not?
I don't know.
Okay.
I don't know.
The other thing is that the government did come out with a fuel price scheme as well, right? I don't think so anyone really participated in the scheme that the government came up with. Any reason for that as to what is the drawback? Because if the government is trying to give in something, I mean, how is the industry looking at it?
Yeah, so first, the government's fuel price scheme is just one of several initiatives that the government is taking place, right? And this scheme is one, but there are many other things related to fuel that they've done. For example, reducing the VAT in 2 principal cities, right? So when it comes to fuel, that's one. Then the subsidies that were provided to airlines for the month of April, May for domestic fuel, that was the other. This is just one element of it. The other element, by the way, which is fantastic, is this emergency credit guarantee scheme, which Akasa is a beneficiary of as well. So as pertains the sum total of government actions, I think we've in India, had one of the most proactive governments when it comes to aviation, has stepped in, to the great fortune and good fortune of the airlines. For this particular scheme, I think it was just a timing, right? Which is that there were a number of things that they did, but as they launched this scheme, fuel price went down.
Okay.
Right, so it's just a timing thing. And by the way, with fuel price up again, the government, I'm sure, is very open to refloating the scheme. But there's nothing more sinister other than the good fortune of fuel price dropping. Okay. And that's all.
So if this is revisited, would Akasa look at
100%. I think as a scheme, it was a wonderful scheme, right? Which is to be able to price some stability of fuel into the market. And so this is a great scheme for us. It's just that when fuel prices plummet the way they did, it didn't work. God forbid if fuel prices were to stay at elevated levels for multiple months. I think it'll be a wonderful scheme to participate in.
To add to this, you're also seeing airfares which are on a rise, correct? I mean, a lot of times where the government has intervened, given out a cap, Are you seeing anything of that sorts that the government could come out with?
Yeah, so I'd say two or three things. First, India today still remains one of the most reasonable and affordable air travel, markets in the world. If you look at a ticket price for 1,000 kilometers in India compared to 1,000 kilometers in most other, mature aviation jurisdictions, Indian fares are still much lower compared to other parts of the world. And by the way, we pay the same US dollar denominated, fuel and aircraft maintenance and ownership, etc., etc. So I'd say fuel prices are extremely reasonable. I'd say the government never has a, problem or a view of controlling fares. The government, as it should, only has concerns if any party decides to gouge customers by charging, 50,000 rupees for a 500-kilometer fare, and that's never been the case. So I'd say no, absolutely. As long as airlines and airlines haven't partaked in that kind of exploitative fare regime, I think the government is very happy to let the markets dictate what fare prices are.
Okay. So to add to those fair price point, you've spoken about growing your capacity as well, but we're talking about 30 to 40% kind of an uptick. Now, given the challenges that we've already spoken about, where you're saying that, okay, we're still comfortable, we have the liquidity that we've kept dry powder to expand. How difficult is it going to be to actually get the right talent as well to run the operations, number one, or create that sustainable demand? And this is coming in at a time where, I'll name competition, Air India is revamping, Indigo has expanded, SpiceJet probably a new lifeline that we're talking about. So how do these dynamics actually look like to figure out how the industry is going to really settle down?
Yeah. So, look, I can only talk about Akasa, and you talked about two aspects.
Absolutely. And that's why I said I'll mention competition just to get a fair bit of an idea.
And there were two aspects of your question, one related to demand and one related to talent to be able to execute Akasa's future strategy. When it comes to demand, we're intricately linked to India, right? Which is the nascency of aviation, the massive growth in India's GDP, which fuels air travel demand. And so from that perspective, you may have one slow quarter, two slow quarters, but we'll have 30 great years, right? And so the next 30 great years, there's this insatiable appetite for air travel demand that the country is going to grow on the backs of what's happening to India Inc., the economy. There's no shortage of demand, right? And I would not look at 1 or 2 quarters. That's not the way Akasa thinks. We think for the long term, and we have the ability to withstand 1 or 2 or 3 or 4 bad quarters, not a problem, right? So just to put that demand, it's wonderful to run an airline in a country that has this kind of demand profile. In terms of talent, we're 5,500 people today. The most difficult part is to go from 0 to 40 in this environment. And we've got the team that has done that. Right? And just the most amazing team that you have at every level, whether it's, the flight attendant, the pilot group, the engineers, the airport staff, or whether it's the sort of the back office, folks, people running strategy or pricing and revenue management, any way you look at it, the operations control people, finance team, any way you look at it, I think we've got world-class talent. And by the way, this is also a reflection of India Inc., right? If you look at some of the most, the largest companies in the world, they're being run by Indians. So India has the talent right here, and that's what we're benefiting from.
Interesting. My last question to you over here is, everything said and done, you've spoken about the IPO, you've spoken about strategy. If someone has to look at Akasa very closely right now, I know it's not a listed entity, but I'm sure someone who wants to look at investing in Akasa 3 years down the line, what are those 2 to 3 metrics that you will ask them to actually focus on?
I think it's the same thing that I would focus on as CEO. It's, what's our revenue profile looking like, and what's our cost profile looking like, our ability to generate cash, profitability. Those are the financial metrics. But I think the most important one, once you have some base of that, comes back to the way consumers look at you, the way the traveler looks at you, because you can have all of that. But if people don't want to travel, it's a short-lived set of finances that you're doing. And so, I'll bring us back to Akasa Elevate. I'll bring us back to the consumer experience that we have built worked so hard to build over the last 4 years. And I would tell people, try us, taste our food, sit in our seats, plug your phone, and get it charged. And that's the difference. That's the reason why we've launched Akasa Elevate, is because people have done that repeatedly. And that's really, what I think is going to propel us for the next, multiple decades.
Very interesting. Thank you, Vinay, so much for this conversation. In fact, with the experience that you have in the industry with Akasa, for all our viewers, one trivia question for the industry or from the industry or about Akasa that you would want to ask the viewers. Let them respond to it.
Let them respond to it. Okay, I'll say, this is an interesting one. This will give consumers, people perhaps who don't have this broad view of how demand is going to expand over the last, the next 10, 12 years. And I say, if dhania can travel on an aircraft, then every Indian over a period of time will have the right to travel on an aircraft, right?
Okay.
And so the question I'll ask the viewers is, how many tons of dhania did Akasa carry in its belly in the last fiscal year?
This is going to be interesting, and let people find that out.
Correct.
And I'm going to make sure you respond to them as well. I'm going to put this out.
Absolutely.
Thank you so much, Vinay. Always a pleasure to speak to you.
Thank you. Thank you.
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact. Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The Gift City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage.
Lackluster day of trade on the Dalal Street as Nifty fails to sustain above the 24,600 level. Broader markets see mixed moves. Tech stocks lead the gains while auto lends some support. On the other hand, pharma and financials continue to sulk. Shares of Samvardhana Motherson surged to hit a fresh record high amid strong Q1 and positive views. Britannia sees volume surge, healthy quarter and brokerage note boost the counter. NBFC stocks like Bajaj Finance come under pressure after RBI's draft lending norms proposed banning revolving credit lines, allowing only term loans. Brokerages warn the move could hurt customer acquisition, growth and yields for lenders with meaningful exposure to such products. The RBI is examining Tata Sons' request for deregistration as a core investment company, non-NBFC, even as the conglomerate continues to feature in the central bank's latest list of upper layer NBFCs. Good afternoon. The Nifty continues to fall below the 24,600 level. Nifty Bank even down around 300 points in trade, led by largely the private banking names like ICICI Bank. In fact, on the other hand, PSU Bank, SBI, which will be reporting its numbers today, continues to gain. The stock was also up around 3% in trade yesterday. Today also it's gaining in trade. Crompton Greaves is another counter on the F&O side, which has been falling post the Q1 numbers. While on the gaining side, we have some Samvardhana Motherson, which is up nearly 9%. But Godrej Consumer has come out with their numbers. If you look at the overall number, the revenue has come in at close to 4,225 crore, which is around 1.5% more than what the street was anticipating. Analyst estimates was close to 4,162. EBITDA came in at 801 crore. Again, a 1% beat on the analyst estimates. Margins have come in slightly lower at close to 18.96. Analysts were estimating this number to be close to 19.05%, while the net profit number, that's a mess of around 6% has come in at close to 505 crore as against 537 crore that the analysts were estimating. The stock is down nearly 2.5% in trade. Overall, the numbers look largely in line, but it's the volume growth number that we still need to watch out for. Now, street was expecting that the volume growth could be anywhere around double digit, but we are yet to get that number. So we'll be waiting out for that number. The stock is down now 2% odd in trade, but volume growth is still pending. But apart from that, overall the numbers look pretty much in line. But let's get in Mahima with finer details on Godrej Consumer.
Right, Soumit, as you mentioned, largely seems to be an inline set of numbers in terms of where Godrej Consumer is concerned. I mean, if we take a look at the overall, operating revenue that's came in at 4,225 odd crore, even in terms of net profit, largely, slightly, of course, lower than what the street was expecting, but revenue at that 4,200 odd crore versus the estimate of 4,162 odd crore. In terms of where the commentary goes, that will be an interesting one to watch out for, because for Godrej Consumer, we are kind of expecting the business update kind of did suggest that overall the Q1 underlying volume growth was expected to be in high single digits, but the fine print, of course, we'll get as to what that number looks like. In terms of the EBITDA, again, largely with what the street was expecting it to be like. International business, I think Indonesia is where the surprise was when the business update also came out in that mid-teens with a double-digit volume growth. So that volume growth will also be a key one to watch out for. And the Guam business, though, is the one where the Middle East, of course, will be impacted because of the West Asia conflict. But overall, it's been, that region as a whole has seen a double-digit growth. So that's with regards to where, the segments go. But once the press release comes out, we'll get more and better understanding as to how the volume growth looks like for the overall business and also for the Indonesia business, because that has seen a good recovery this quarter. So that's the, whole and soul of what you can make of the first quarter of Godrej Consumer.
Well, thank you, Mahima, for that. So we'll be waiting for the press release to come out so that we get the volume growth numbers for Godrej Consumer. Well, moving on, let's welcome in Aman Chauhan, the fund manager with Vacus Asset Managers, to understand more of how to deal with the current volatility in the markets. Sir, firstly to start off with, despite the fact that crude has now come down, earnings have been better than what the street was anticipating. Markets still continue to consolidate. What do you think, what has been holding down the markets currently?
The markets always move in anticipation. They are always ahead of the news, right? So the recovery that we saw in the market in the month of April, May, June, which was ahead of the fall in crude price, is now fairly capturing in the upsides, right? So investors felt that crude is not going to stay 100 plus for longer. The war situation won't continue for longer. And markets rallied before the war ended, right? So when the war started, we all felt maybe week, 10 days, the war will end, but it did not. Yet markets rallied, right? So they already in anticipation captured the upsides. Now crude is below, which is already factored in by the market, I believe. And that's the reason from these levels, market is consolidation. They are waiting for fresh triggers. Plus, I believe too much of supply is there in the market. Lots of block deals from the PE sellers. Every day there's a new IPO which is coming in, which is also absorbing a lot of liquidity. So it's a combination of these factors, which I think is can say responsible for the flattish or the consolidation in the markets over the last say few days, weeks.
So then, as per you, as you were mentioning that markets are waiting for few triggers, as per you, what could be that trigger which could take the market to the next level?
Earnings is not going to be a very major trigger because there's not going to be an earnings upgrade, right? So whatever we have, we might see a scenario that you fear the earnings downgrade due to margin pressures, due to higher transportation and higher crude prices. That may not happen, but upgrade is not going to happen in a hurry because we are also facing a much weaker monsoon this year than compared to what has been the general trend in the past. Uh, there has to be something coming from the government, some kind of policy action. There is some kind of things either to support the rupee, to encourage exports, or some kind of conclusion on tariffs with US. We did conclude, but then again, there is kind of uncertainty because they want to put on new tariffs, or maybe a proper stability in the geopolitical scenario. That is something also which can be a meaningful trigger for Indian equities to do well. Uh, Unwinding of AI trade, which is being talked about because there has been quite a bit of volatility in the Korean Kospi, even in the US markets. I don't think that's going to be a positive trigger for the markets in the near term. It's not going to happen that the people will book profits in the AI trade and then the money will come to India in a hurry, right? So it will, but it will take time. So that is not no longer trigger. But if US markets continue to do well, then maybe there can be catch up rally in India also. So it's I think broadly some government action or something from the global front is what I believe the markets would be waiting for.
So talking about AI, sir, for the first half of this calendar year, IT was the worst performing sector. July month was very strong for the IT sector. I believe we saw 20% upside, 20% gains when it comes to the Nifty IT index. But right now, do you see there is more room for further upside, or it is now priced to perfection?
It's not priced to perfection. It's value even now, but with very few triggers. So somebody with a benchmark fund or somebody seeking value, for them IT still makes sense. Somebody who's seeking growth, for them this sector is still not the one. Somebody seeking momentum, also this is not the sector, because what will happen is every 3-6 months there is going to be a new AI module launch that is going to happen, or a new version that is going to come, right? So the news flow for this sector is continue to be weak, and for that reason we almost exited the traditional IT services more than 6 months back, and are not in a hurry to come back, even though stocks have corrected and there has been some technical bounce back also. We are staying away from this sector.
Right. And sir, we are seeing some signs of FII coming back, but overall, how do you see the global capital flows to be into the country for the rest of this financial year?
I think there's a fair chance that FIs will come back because at 95, the risk of further currency depreciation is behind us. On the fringe, demand is holding on in India. Middle East has continued for long, but now even if the war doesn't end or the issue doesn't end, oil has come off, so it's no longer a worry for us. We are one of the worst relative performers. So on an absolute basis, we might not, but on a relative basis, other markets have done much well over the last 12, 15 months. So from that point, the relative underperformance, you can say mean reversion trade can also come into India. So there's a fair chance once things stabilize globally, there is less of uncertainty. FI monies can flow back into India in the second half. That's broadly what we also feel. It's a fair chance the money can come in.
Sir, just a minute. We have Mahima joining with us to give us more details on Godrej Consumers' volume growth and what has come out from the press release.
Right. So, Amit, the volume growth on a consolidated basis has come in at that 9% mark, and on standalone basis has come at that 7% mark. So, slightly better versus what the street was expecting. But in terms of where the Africa business goes, that's been a beat. But Indonesia business has seen a growth of around 15-odd%. In terms of India business, the growth has come in at 11.5%, and the Africa business has seen a growth of around 46%. I think India business growth coming in at 11.5% is probably the reason as to what the street is not liked, and that's why we're seeing the stock tank. But volume growth at that 9%, slightly less than the street estimate, but not a very bad volume number per se.
Okay. Thank you, Mahima, for that. Aman sir, when it comes to the macro variables, what is that one thing that you'll be watching out for most? Will it be interest rates, liquidity, oil, currency, or something else?
I think currency is now behind us, so I don't think currency is that big an issue. Interest rates maybe not headed lower in the near term, but they are not rising either. So that is also not something that is. Inflation could be a number, I believe, which one should be closely working, because that is also something which is linked to crude price. So if crude stays higher for longer, or for some reason the price of crude gets reflected into the inflation number, then eventually it will get looked into the interest rate scenario also. So for me, monsoon also is something that needs to be very closely watched, because that will also impact inflation. So I believe inflation would be the number closely watched out for.
And lastly, sir, just wanted to check with you one thing. Which are the 3 stocks that could outperform as per you, say, over the next 1 to 2 years?
Sorry, we don't discuss stock specific because of
sectors. I mean sectors. Sorry. I mean sectors.
Sectors, I believe pharma will continue to do well. It's been relatively insulated both from the global uncertainty, plus a big beneficiary of the currency depreciation. So that is one sector which we are positive on. We feel should continue to do well. Domestic manufacturing is a multi-year theme that should continue to do well. So bearing the next 1-2 quarters where we see a margin pressure due to higher metal prices, but cap good companies, engineering companies should do well. EPC companies should do well. And financials, within financials, we are positive on NBFCs, and then private banks, and then PSU banks. So in that range, feel NBFCs can also continue their outperformance in the near term.
Okay. Well, thank you, sir. Thank you for joining us and giving us your perspective on the markets. Moving on to Britannia. Now, Britannia has delivered an inline June quarter, but it was the volume growth number that surprised the street and led the stock higher. Let's get in Mahima with more details on the same.
Right, so Amit, as you rightly mentioned, a 9% volume growth is what is excited this street, but the stock has of course come off from the day's high point. But I think the key highlights from the conference call was that going forward, they're expecting price hikes to be around that 1.5% mark. This quarter, they've mitigated half of the inflation by shrinkflation, and half they've done it by absorbing by themselves. In terms of the overall approach and commentary suggests that it is going to be a cautious approach where margins are concerned, because raw material costs are going up, inflation in terms of LPG plus other raw materials are also going up. They're cautious overall in terms of El Nino monsoon effect as well. So there also it'll be a wait and watch out for demand. They've said that right now the demand is very steady, but going forward they're not sure of how macro factors will pan out, and that's why they've said that it's a wait and watch out situation for it. Overall, for sales headwinds in the Middle East market, they have seen in terms of the Middle East conflict, they said that they'll be closely monitoring this, and international business, though, has seen a flat growth. It's been a resilient one despite of the geopolitical situation, and e-commerce has led a strong double-digit growth in Q1. So this is the overall summary of what the conference call commentary looks like.
Right. Right. Well, Samvardhana Motherson, that counter has been gaining in trade up around 9% after reporting a strong quarter. Let's listen into what the management had to say about the quarter and cost optimization measures that could drive the future growth for the company.
This was the best ever performance as far as the top line of the company is concerned. We achieved our top line of 35,000 crore rupees. Generally speaking, June quarter is comparatively inferior in terms of top line than March quarter. But as a matter of fact, June quarter top line was better than the March 26 quarter. You're right. We, like other industries, also faced a bit of headwind because of commodity prices. And we also noticed a bit of a contraction in gross margin. But over the period, we have taken several cost optimization initiatives. We have also invested in technology. We also got some benefit of leverage because of the robust growth in top line by almost 17%. And as a result of that, between June 25 and June 26, we were able to expand our EBITDA margin by almost 60 bips. You are right. There are some costs which can be passed on. For example, in wiring harness business, in general, we are able to pass on the increase in copper prices between a quarter or two. And we anticipate that we continue with similar model in this business in quarters to come.
Moving on to an exclusive chat with NDTV Profit, Pharma Secretary Manoj Joshi says India must move beyond assembly of medical devices and increase local value addition, expanding domestic API production as well. Listen into what he has to say.
What is the way ahead for the India medical devices sector? What sort of growth we've seen, given the fact that we have had one PLI scheme already come out, second one in the works? Talk to us about what the growth is.
I think we need, in high-end medical devices, we have seen a lot of assembly happening in India. Now we would like to see more value addition, domestic value addition happening in India to at least say 40-45%. And a lot of growth in component manufacturing in India. We would like more and more units to produce components in India so that we can cater not just to Indian market but to export market. And also in consumables and disposable side, where India has some strength and we do export products also, we would like to see more and more exports of quality products to happen in India. Diagnostic side, we would like some companies to set up production facilities here because we don't have much of a production in India. And implants is another area where we are done quite well. And we would like a larger share in export markets for India.
So what are the sort of incentives we are working towards to attract these? Like you said, we need to set up these manufacturing, end-to-end manufacturing in India, not just assembly.
I think the government's focus is, one is the production-linked incentive schemes which are there for electronic industry, for printed circuit boards, for medical devices, because it's across different sectors, components which are used in medical devices. So all of those PLI schemes are supporting component industry in medical devices. We are working on medical devices parks also and the development of labs and testing facilities so that it's easier for industry to access to these facilities.
Well, that was an exclusive chat with the Pharma Secretary. Moving on, the standoff between restaurant bodies and food delivery platforms continue. But talks are gathering pace. While Zomato has been giving more time to find a resolution, Swiggy still faces the original August 15 deadline. Ridhima is standing by with more details on the same.
National Restaurant Association and Bangalore and Karnataka Restaurant Associations are all set to meet Swiggy and Zomato representatives today, and this is after the ongoing tussle between the food apps and the Restaurant Association with respect to platform practices. Now, NRAI and Bangalore Association have extended the deadline given to Zomato for halting their orders from 15th August to now September 1st. The association has said that Zomato CEO will be willing to resolve the issue before September the 1st, and Restaurant Association hasn't extended any deadline for Swiggy. So the deadline for Swiggy for halting the operation stands at August 15. This is as per the information from NRAI and Restaurant Associations of Bangalore and Karnataka. Now, their main demands include that they want greater transparency with respect to commission structures, and also end to force discounts and deep discounting by the platforms. And thirdly, they also want timely and transparent payment settlements and no unilateral deductions from these platforms. Now, the background of this issue so far, the issue started happening around late July when the restaurant bodies had raised issues with the concerns over platform practices, and on July 28th to 30th, they warned of possible boycott if the demands are not met, and on August 6th, they've extended the deadline with Zomato, but they've not extended any deadline for Swiggy. Now, how important are these platforms for these restaurants? Around 100% of the revenue for these dark kitchens comes from these online apps or food apps, and about 5 to 30% of the revenue for these other restaurants comes from these food apps. So which makes it very important for them. Now, sources tell us that there has been negligible impact on the companies so far, and there's a way forward which is being going on with respect to the talks between these food apps and these companies and the associations.
Right, thank you, Rizma, for that. Moving on to RateGain Technologies. Now, that company reported a strong June quarter. In fact, they have also hiked their guidance. To understand more about this, let's welcome in Bhanu Chopra, the founder of RateGain. So, firstly, to start off with, you have increased your revenue guidance, you have increased your margin guidance. What are the factors that are giving you this confidence?
Yeah, so as you saw our Q1 results, we came in almost 3x on the revenue and 4x on the EBITDA, and our results actually exceeded our expectations for Q1. And the kind of visibility that we see in the numbers, the momentum that we see in sales, and there's lots of exciting stuff that we're doing using AI native products. So just the overall momentum of the business. Our integration with the company that we acquired, Sojourn, is running ahead of schedule as well. And we've been able to realize all the cost synergies, and now we're working on the revenue synergies. And just as an example, this first quarter, our APAC team started selling the combined offering between Sojourn and RateGain, and we had a bumper quarter. In fact, we sold 200% more in APAC region versus last year. So lots of good signals, and that gave us the confidence to up the guidance.
Conservative here? Because 3x revenue growth in one quarter, 70% for the full financial year. Are you being conservative, or the base is high? What is the reason behind this?
So if you look at our numbers from last year, they are standalone numbers, and this year we have Sojourn numbers. It's the numbers of the acquired company. So organically, if you look at it, our growth is about 17.5%. So combined with the acquired company, the overall numbers for the year come out at 70%.
Okay. So one thing I just wanted to check with you, how much was the revenue in Q1 from allied services like the credit card companies that you receive from credit card companies for data analytics? Because I believe that is not part of your core business as of now, but contribute high on the margin front.
From a contribution perspective, no, they're not higher, they're in fact lower. So just to remind you and the audience, we are the largest travel intent data company in the world today. So what does that mean? That means we know where people are traveling, and we can build out travel audiences for our customers so that they can get more out of their performance marketing dollars. And this data is quite useful for lots of other industries. So let's say, when you take an example of a credit card company, we had the FIFA World Cup, and they were interested in being top of mind of their users. So they used our data to understand who's traveling to the US and would want to advertise to them, so that whenever they take out their credit card for any charges, they're using, their specific card, whether it's Visa or MasterCard, etc. So, so we do sell this data for running campaigns to travel audiences of interest to different companies, and that revenue is about 4 to 5% of the overall revenue that we have. So you can say on a base of almost 800 crores, maybe 35-40 crores worth to these ancillary customer segments.
Okay, and one thing on the organic growth, I believe the organic growth excluding the FIFA and Middle East disruption was largely flat for the company. What are the top 3 operational levers that can sustainably move organic growth into the mid-teens, say, over the next 6 to 8 quarters?
Yeah, that's actually factually incorrect. The organic growth landed up at 17.5%, and as I explained in the earnings call, there was an uplift with one-time uplift through FIFA, which was around 2.5 million, but we also had an offsetting because of the Middle East of war. So I would say organically, we have guided the market at 12 to 15% for the whole year, and we came ahead of that at 17.5%. But as I was stating earlier, given what we are seeing in the business right now and the momentum, we should come in at the upper end of that range of 12 to 15% organic.
Okay. Cool. Thank you, sir. Thank you for joining us and giving us the way forward for rate gain. Well, that was the management quite optimistic on achieving the increased guidance. Well, with that, it's a wrap on this edition of Markets at 12. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year.
We are joined in by Sri R. Doraswamy. He's the
MD and CEO at LIC. And congratulations, sir, on the Q1 numbers. They were standout here.
Thank you.
What led to this, sir? And is there more profit levers going ahead?
We have been maintaining that ever since we went for IPO. We have embarked on a directional shift in terms of product mix. So all the products that we launched after 2022 have been on the non-par side, and with a continued focus, we have improved the contribution from non-par products. And that is something which has helped in the corporation coming up to these numbers. We have been able to do well. Particularly in the first quarter of current year, we found that the contribution from non-par savings and non-par protection have gone up, which have helped in the improvement in margins and VNB numbers.
Yes, sir. Speaking of the VNB numbers, these margins are improving, and it seems like the tone of the management is that it will go up on the higher side. Just wanted to understand, is the gap coming closer towards your private peers now?
Yeah, we have always been maintaining that we'll be improving our margins in such a way that we can be one among the best in the industry. Right. That has been our focus. When it comes to VNB margins, there are multiple components. One is the product mix. The product mix change that we have been bringing about has helped in this. Two is our improvement in the operational efficiency. Our expenses ratio has been continuously on the decline, and we have been focused on that as well. These two are under our control, which will be continuing to work, and I think there will be further improvements on that. Given that the interest rate scenario remains the same way, I think we can see some more improvement in this area.
Fair enough. The AP segment, annualized premium equivalent, that is steady this quarter, not very great as compared to VNB. What are the key reasons behind it?
No, we had a difficulty in terms of maintaining the kind of volumes that we had in ULIPs and annuity, given the market situation that was there in the first quarter.
So is it because of the West Asia crisis?
Yes. When there is an uncertainty in the market, when income of the people get affected, naturally it results in with an impact on the savings capability. When income of somebody goes up, the first thing to get affected will be the savings. So we had difficulty, and particularly the kind of volatility that we saw in the capital markets brought the ULIPs into clear focus. So we could not show the kind of growth that we are expecting in ULIPs and annuities.
Fair enough. But let's talk a little bit about par versus non-par segment. What's the ratio right now? And what kind of target we can expect 2 to 3 years down the line?
We started at around 8% share of non-par when the IPO time was there. And from there, we have been continuously focusing on improving. We have now reached 32% non-par and 68% par. That's what we have reached. We are looking at a ratio between 30 and 35 as a non-par, and it can go up a bit more. We can
by when it can be achieved, do you think?
It's almost consolidating now. For the year, last year itself, we touched 34, 35, and that's the range we would like to keep.
Oh, fair enough. But the average ticket size, I'm hearing or I'm seeing the numbers has gone up as well. Do you think this trend will continue going ahead?
Yes. See, we are trying to improve the focus on high ticket sales. In October 24, when the new master circular on products was rolled out by the regulator, we had to align our products to be compliant with that. So one step that we took was to increase the minimum ticket size of the policy in terms of sum assured from 1 lakh to 2 lakh for the highly selling products. That has helped. And also we would like to see that our agents are trained to talk about focusing on the protection gap. So what is the amount of insurance a person should have given the income and the other liability that a person has. So that is something which is slowly starting to pay off. We would like to have further improvement in the ticket size in the days to come.
Nicely explained, sir. But I want to understand, IRDAI expected to come with regulations maybe in the next couple of weeks. What's the industry buzz? What's the expectations looking like? On which area it might be?
See, the next change in regulations is expected on distribution sector. So the regulator has been talking about the distribution sector reforms for quite some time. The focus of the regulator has been rightly on improving the accessibility, improving the distribution efficiency, and ensuring that the customer interests are well protected.
So customer wins.
Customer benefit. So that's the main focus. If the costs on distributions are high, it will result in the benefits payable to the customer being reduced. So that is the one area which is the focus, and a lot of deliberations have happened. The regulator has had individual discussions with
So it will be like a white paper coming out.
No, it will be a discussion paper.
It will be a discussion
paper on the kind of sector, the reforms that the regulator is thinking of. We are expecting it in the immediate future. The regulator has also been talking about how the distribution costs need to be optimized, and particularly how it should be aligned to effort-based remuneration kind of a thing. And sure, when it comes to LIC, we have been having the least ratio in terms of commission to total premium
as
income
compared to the private
as
players.
compared to the industry and the private players. So we don't expect too much of an impact on LIC given this position of LIC. But whatever changes are going to be brought, we are fully confident that we'll be able to act upon it, ensure that we are compliant, and also protect the interest of the customers and our agents.
Fair enough, sir. And the agency business, 93% of that business is coming from there. But alternate channels have started increasing, even though it's a low base. So which are the alternate channels looking like for growth?
No, we have both. We have the banks as partners, as well as the corporate agents, brokers, IMFs, and other such organizations which can do, the web aggregators and others. Okay. So our focus has been to keep our strength strong. So agents training, agents handholding, and ensuring that a good improvement in the productivity of agents is one of our key result areas where we are working on. At the same time, we found that the opportunity that was being available in terms of getting premium through banks and alternate channel has to be fully utilized. So we started focusing on that for the last 2 years. We have improved from a 2.5% ratio, which was there at the time of IPO, to 8.2% through banks, alternate channel, and digital in the last financial year. We expect it to go further because the potential is still high, but we are ensuring that we get the best out of agents as well as the alternate channels and banks. So our ratio of business done through banks and alternate channels is expected to increase to close to double digit in the current year, and still further improvement is possible in the years to come.
So the last question is on the guidances. Any important numbers we should be tracking for the end of FY27? Any numbers which have been discussed?
No, we are looking at enhancing our margins to the best of the industry, or to the industry average level at least. That is something which we will continue to work on. Our improvement will be on the contribution from bancassurance and alternate channel. That is one more area which we are looking at. On the product front, we have been doing well on savings, which will continue to improve. We have been doing well on the annuity side, which is a pension market, which is an emerging market, which is required for the country. We will continue to do well in that also. Last 2 years, we saw a good growth in ULIPs. The market fare has also been good for it. The first quarter did not see a good growth there because of the market uncertainty, but we expect to come back in that also in a good way. And the fourth bucket, which is the protection bucket, that is also something which we have started increasing our focus. It has seen a good growth in the first quarter. In the current year, we expect to see something more, some good growth in protection and savings. That's also something.
Well, that was the management of LIC. Hello and welcome. You're watching Trending Stocks right here on NDTV Profit. My name is Puneet Zaveri. With me is Hiral Dadia. And over the next half an hour, we'll continue to focus on those key stories as well as what's happening with the market today as well. But let's take a quick check of that as well, because you've seen largely that 77 to 80 point kind of a correction on the Nifty 50. The Bank Nifty too has largely remained volatile as well as softer as we end a week which was led by cash amongst other reasons which we've been tracking at the end of the day. But overall, those are some of the key aspects that drive on this Friday afternoon. Let's look at the key factors now that we're tracking right now. Both, of course, on the index, Nifty remains volatile. Bank Nifty also at 57,700 has been in that midpoint range now. 58,200, 58,800 are those higher resistance levels that we are watching out for as well. But buying has been seen in certain segments like the IT as well as the auto segment that continues to be in focus. We've had a good set of results over the last couple of weeks for the auto pack, and new launches expected in the next week too. NBFCs are under pressure after the RBI proposals. You saw a sharp downtake on Bajaj Finance, and that has continued to be down. Shriram Finance also trading down by almost 2% right now. But the rupee also marginally remaining weaker at this point of time. Crude has been volatile too over the last couple of days. We first saw a deceleration and then yet again. But quarter one earnings today, these are some big ones that we're tracking. SBI will come during market hours, so the next couple of hours will be crucial for this counter. Hindalco as well as Titan, another big counter that will come through as well, because you saw some good updates from Kalyan, but post results we've seen some correction on that stock as well. Ola Electric, of course, continues to be in focus on the back of results. So is Keynes Tech and PFC. For Keynes Tech, you will watch out for all those advances that the company has done in terms of resolving those cash flow issues. So that's something to watch out for. Also, what to watch has been the US July non-farm payroll data, which will come in India time in the evening, and the July unemployment data that will also come through will be something to watch as well. But Hiral, back to you as to what you're tracking and the company that we have on our focus now.
Thank you, Puneet, for that. Muthoot Microfinance, that's the stock we're focusing on today. Let's pull up that one on the screens and see what the counter is doing in trade with regards to the impact on the back of the earnings, because there has been a sharp rebound in terms of profitability as well. The stock actually opened higher if you check your screens, and from there it's corrected quite a bit. Now, the question is, AUM growth is accelerating, credit costs are normalizing. In terms of FY27 guidance as well, what is achievable, and whether the recovery in the microfinance cycle is sustainable or not. Sadaf Saeed, CEO at Muthoot Microfinance, joins in. Sadaf, welcome to the show. Always a pleasure to speak to you. You know, my question is, a sharp improvement is what we've seen in terms of where the profitability goes off in the first quarter, and has been driven by lower costs as well. Can you confidently say that the worst of the asset quality cycle stress is now behind the industry?
Yeah, good afternoon, Veeral. Thank you for having me here. Definitely, I think the worst of the cycle is over. In fact, in the industry, we are seeing a good uptick in numbers in terms of disbursement as well as improvement in the asset quality. And of course, Muthoot Microfinance has been on the forefront of the revival of the industry. And we have specifically identified a strategy of diversification, and which is what we are playing out here. And this is showing in our numbers. If you look at the disbursement, we had the best first quarter disbursement ever, 2,644 crores of disbursement. The same number was around 1775 crores last year. So it's a 50% almost improvement on the disbursement number. And if you look at that, translates into year-on-year asset under management growth of around 18%, and our income growth of around 20%. And most importantly, if you look at the PPOP, it has also improved by 43% year-on-year. So our diversification strategy is really helping us to improve asset quality and continue to maintain the growth. And that is our effort to ensure that there is a sustainability across cycles. So because microfinance as a business faces challenges if there is a macroeconomic event or any external event. With the diversification, which is in the individual loan, gold loans, as well as loan against property, trying to build that stability into the portfolio.
So, okay, so diversification is the key over here. And my question then is, are you seeing any pockets of stress that continue to worry you? Either it could be geographically or any specific borrowing segments that you would be tracking closely so that there is no derailment happening?
So as of now, I think all of the asset qualities are behaving really, really well. If you look at our individual loan portfolio, the delinquency there is 30 plus is 0.02%. And gold being a secured loan, there is no delinquency at all. And loan against property also, the asset that we have built, the delinquency is less than 20 bips. So from that perspective, we are quite stable. Even in JLG business, we are seeing collection really, really improving. Our overall collection has improved to almost 98%, and our X-bucket collection is 99.9%. So we are seeing a very, very good improvement in collections. The cash flow in the hand of the rural borrowers are improving, and as a result, the collection is also improving. I think we are actually at a very, very sweet spot. We have a very good asset quality improvement, and the diversification, all the things have been put in place. We have a strong liquidity available in the market. We are sitting on a 5,000 crores of sanction in hand, around 1,300 crores of liquidity in hand. Our cost of fund is coming down. It has come down from 10.27% to 10.13%, 14 bips in just one quarter. We have also been upgraded in terms of our rating. We are now AA minus company. The benefit of that rating will translate in the coming year, so cost of fund will further come down. So I think all four fronts, whether it's growth, whether it's asset quality, whether it's cost of fund, availability of fund, we are really doing well. Hence, we have revised the growth targets also from 15% to 20% for the current financial year.
Absolutely. So that's the revision we're talking about, at least in terms of AUM growth, 12 to 15 to 18 to 20. What about the non-JLG products? I'm talking about the joint liability group products. That has continued to rise as well. So what is that ultimate mix that you're looking at between the JLG and non-JLG portfolios over the next 2 to 3 years? And what will that do in terms of impact on the financial side of it?
Yeah, that's a very important question. I think right now we had given a guidance of for the financial year around 75% JLG and 25% non-JLG. We are already at 76% JLG and 24% non-JLG. So by the end of the year, we will be at around 70-30% kind of a mix. Our long-term target is to have a 55-45 mix at the AUM level, and at the balance sheet level around 60-40 as permitted by RBI. Definitely, this will have a huge impact on the asset quality as well as on the operating efficiency, because these products that we have introduced, which are non-JLG, these are all based on e-NACH collection. So this is all digital collection. We are able to serve more customer with the same number of branches and same number of people. And that is really helping us to bring in the efficiency. Our productivity per branch, where we used to manage around 7 crore per branch, now we are managing 8.5 crore per branch. So almost 20% improvement in the branch AUM also we have seen. And as a result, the efficiency in the operating cost will also come in. We have already reduced our cost by 10 bips from the last quarter. It was 6.4% to 6.3%. And all of this will translate into better operating efficiency, better credit cost, and higher ROA. Hence, we have guided an ROA of around 3.3%. And in the long run, for the 30,000 crore AUM, we are guiding around 5% ROA. And this is what I think diversification will help us to lead to.
Okay, quick question in terms of fundraise and cash position. CRISIL has upgraded your credit rating as well. So what are the benefits that you're seeing on that front in terms of your borrowing costs and funding access? And that 4,000 crore fundraise that you've got an approval for NCDs as well. How much growth can be supported through the existing capital versus your fresh borrowings?
So we are looking to disperse around 3,000 crores per quarter, and going forward in the quarters that we will be in the last 2 quarters, it will be around 4,000 crores. So in the balance period, we will disperse around 11,000 crores more. In terms of our liquidity, as I said, we have 5,000 crores of sanction in hand. Plus, we have not yet done any NCD because we were waiting for this rating upgrade, which upgrade has already come, and there's a huge amount of NCD demand. Also, we have a 4,000 crore approval. We can go for that as well. And we have certain ECB approvals also sanctions in hand. The ECB we are not drawing right now because of the volatility in the foreign exchange prices and the hedging cost. So once that stabilizes, definitely we will borrow that also. But more importantly, the benefit of our rating upgrade will start accruing to us in the Q2, Q3 onwards. As we borrow more funds, definitely we anticipate that 25 to 30 bips of rate reduction we can further bring in. And the year we will finish in single digit in terms of our cost of fund. That is definitely likely to happen this financial year.
Last question is, you've received a perpetual authorized dealer category foreign exchange license from the RBI as well. What would this actually mean in terms of getting the license, and what does this mean from a business perspective? What will be the vision here?
See, the idea is to access capital from different sources. We have a lot of DFIs, which are foreign entities, which are lending to us. And they continue to support our growth and continue to lend to us. The challenge there is basically the hedging cost, and we think that as the dollar stabilizes against rupee and we are able to get a stable kind of a hedging cost, we should definitely be able to borrow more, and this facility will definitely help us to borrow that dollar loans. And we would be able to maintain our margin and improve on our NIM and ensure we are able to deliver and cater to the demand that the customer is creating.
Okay, thank you so much for that. I mean, lots to actually watch out for as well, and that uptick in guidance is something that the street is now watching out for. Thank you, Sadav. Always a pleasure to speak to you. So that's the management of Muthoot Microfinance. The stock is up 0.7%. But now it's the time for the rapid fire, which we always do it at the start of the show. Today we're going to do it at the end of the show, and Puneet will take you through that one with Sachin Janardhan Sarvade. Puneet, over to you.
Well, thank you for that, Sachin. Good afternoon and welcome to the show. The first stock, Bajaj Finance. Now, of course, we've seen on the fundamental side of things, those regulation changes could have an impact on the stock. Is that visible on the charts as well?
Basically, we have seen on a chart, it is just a normal profit only. Support levels for the stock is around 1050 levels and 1020 levels. So in that area, we are seeing some kind of a buying interest. One can buy at that level.
The other ones, Samvardhana Motherson as well, strong set of numbers, good commentary. But Sachin, does this momentum continue? It's not reached this level for quite some time now.
We are actually seeing a breakout on a monthly basis, so it is accompanying with good volumes basically. So we will see some kind of a profit booking, but yeah, the momentum will be able to continue on the upside. We can see 190 and 200 levels.
The other one's Hero Motor Corp. Yet again, you've seen good commentary from the company in the con call this morning. But how are you looking at this on the charts as well? We've seen some correction from the highs, Sachin. But what are you picking up?
That is a normal correction in an ongoing process. The stock is actually trying to change trend from down to up on a daily charts. So it will have some kind of a pull push, but overall what we are seeing on a higher time frame on a weekly and monthly, we can see some kind of a good upside in coming months basically. So our target for Hero Motor Corp is around 7600. We can see that levels as well.
Also, Sachin, on PG Electroplast as well, another one that's buzzing on the back of results. How do the charts look for this counter?
PG Electroplast, overall what we see on a daily, monthly and weekly time frame, it is trying to change on a daily time frame from down to up. We have to be cautious because this is the first change what we are seeing on the charts. It need to be closed around above 650 levels. If we are getting that and a follow up buying, then we can see 700 and 750 levels on the upside. On the downside, around 550 levels is very much important. If it is again closing below that level, then again the trend will change.
Got it. And also, as we look at Siemens Energy as well. Another high flyer in trade today as well, Sachin. Stock has continued to maintain that 12 to 14% uptick. Are the targets still ahead on the charts, or is it a good time to book profits?
No, we can hold the stock, and what we are seeing in the charts is around 4300 and 5100 targets as well. So buy on this will be a very good strategy in this stock.
Also, what's your view on Kalyan Jewellers, Sachin?
So Kalyan, I have already given on your NDTV Profit. I am very much optimistic in this stock, and we can see at least 5 to 10% more in this stock.
Also on Ixigo as well. Now this counter again on the back of results, but it's bleeding in trade today right now. Sachin, how are you looking at Ixigo as well? Seen some massive correction since October 2025 levels. Is there any stop loss in sight?
We are not optimistic on this stock because the stock has taken a resistance around 200 and SMA basically, and we are seeing a lower high, lower low from that level. So one should exit if they are holding it.
And the final one, Sachin, on Crompton as well. What are you picking up?
So Crompton today, what we are seeing on a derivatives basically chart as well, there is a short built up. Even the trend is down, and on charts the volumes are very much higher. So this sell-off is with volumes, so one should exit this.
Got it. Well, that was the last question of the rapid fire. Sachin, thank you for joining in, giving us your perspective as well. But back to you, Hiral.
Thank you so much for that, Puneet and Sachin. In fact, let's just quickly pull up the markets as well once again. Let's pull up Nifty 50. We'll look at Bank Nifty sectoral indices and then what's happening with the broader markets as well. Nifty 50 trying to inch higher from the day's lowest levels, but there is some movement there, 0.3% lower as we speak, but we are below that 24,600 mark. Let's just quickly also pull up Bank Nifty on the screens and then we'll look at individual sectors as well as to what's happening on that front. Bank Nifty also a similar kind of chart, 0.5% downtick coming in there. If we can just have the sectoral heat map and then we'll have the Nifty 50 heat map as we speak to understand what are the stocks which are actually pulling Nifty lower. IT was the one which was the top gainer in today's session. If you look at Nifty, okay, we have the Nifty 50 heat map first, but TCS continues to be the top gainer followed by an M&M. Hindalco will be reporting numbers today, so ahead of the numbers that stock is up around 1%. Indigo, Reliance Industries, HUL, Nestle, a few of the top gainers. What's losing out? Bajaj Finserv and Bajaj Finance, both of these counters are under pressure, and the reason why you're seeing this kind of pressure in terms of where Bajaj Twins goes is on the back of the RBI circular which is coming for the NBFC space, and there you go, 4 to 5% downtick coming in there. So that's what the markets are doing at this hour. But completely out of time on this edition of Trending Stocks from Puneet, the team that put the show together, and myself. Lots more lineup on the other side. Please stay tuned. It's time for a quick break from the NDTV Profit Suzlon studio. We'll be right back.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one.
Good afternoon, you're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top bazaars at this hour, all while you grab lunch. But before we do that, let's take a very quick look at what the markets are up to right now. And when you talk about Nifty 50, some bit of pressure that you're really seeing coming in, about 80 odd points pressure also coming in there. When you talk about Sensex as well, somewhere close to 450 point decline also is what you're seeing coming in there as well. And when you talk about the sectoral picture, it's actually autos, IT and India defense and perhaps energy that is just a little bit resilient at the moment. What's not doing so well is financial services, Nifty Bank, Nifty Pharma, rural, oil and gas. Some of those sectors on the back foot. What's not doing so well from within the Nifty 50 pack is something like a Bajaj Finance, Bajaj Finserv also for that matter, so the Bajaj Twins, Trend, Shriram Finance, ICICI Bank and Jio Financial Services. Some of those counters on the back foot just a tad bit, and some of your IT counters are holding up quite resilient, like I said. So something like a TCS, Infosys, HCL Tech, all of those counters doing quite well for themselves, and Reliance also quite resilient with that 0.5% thereabout uptick also coming in. With that said and done, let's also talk about Keval Kiran, and that's in focus on account of its quarterly numbers. The company has delivered a strong first quarter with growth also driven largely by some of those higher volumes and improving execution as well. In fact, Pat, this is quite the interesting set of numbers that you're looking at.
Absolutely, they have reported a strong set of Q1 numbers, and we have the management as well. We are joined by Mr. Pankaj Jain, who is the president at Keval Kiran Clothing. Let's start with I wanted to ask about the volumes, sir. In the first quarter of FY27, our volume growth was 18%. So what is the demand outlook that is there for the next quarters? Is 18% sustainable at this point?
Okay, the market is challenging as of today. Okay, but I think the strategies where Keval Kiran is playing into will be able to achieve double-digit growth in the coming quarters also.
Is that double-digit growth going to be on the higher double-digit side or the lower double-digit side, sir?
See, as we gave an estimate, we look at our revenue growth close to around anywhere between 15 to 18%.
The retail channel in the first quarter was at 59%, the channel mix versus 54% in the first quarter of last year. So how do you expect this mix to change going forward, and how does it impact our margins?
So our retail mix comprises of our own EBOs, and chain stores. Our non-retail comprises of distribution, which is general trade, exports and online. We have been focusing on increasing our scale in retail. The composite blend on both on the EBITDA level for retail as well as non-retail is almost similar.
Okay, and also on this retail channel, do we expect this mix to grow further in the coming quarters?
Our focus is to concentrate more on retail.
Also, sir, you have given a vision 2028 where the company is targeting around 900 EBOs, but in this quarter the addition was just at 4. So when can we expect this pace of store additions to pick up?
Generally, the store opening happens generally in quarter 2 and quarter 3. Majority of the store openings happening in quarter 2 and
also,
quarter 3.
how much net store addition can we expect by the end of this year, which is FY27?
Anywhere between 50 to 70.
Understood. And also, since the company has a very strong net cash position at this point of time, how are we planning to deploy those cash flows? Are we looking towards any expansions or acquisitions?
We have been okay, as we explained in the last con call. We have changed the growth strategy from 15 to 18%, where we feel that 15% can be touched organically. Okay, we are also looking at inorganic opportunities. So we are also in touch talks with some of the people. Okay, anything regarding the inorganic perspective? Okay,
Understood,
we'll
sir.
let you know.
Also on the share of apparels that has increased in our overall volumes, it has increased quite meaningfully. So how does that affect our margins?
As compared to a non-apparel mix, retail mix, apparel has a higher GM contribution, and we feel that okay, the volume growth will be more on the apparel mix.
A follow-up on that, do we have any guidance for the volume growth in apparels?
When we say that okay, we'll be able to achieve anywhere between 15 to 18%, generally it's 10% volume growth to a 5 to 6% realization growth.
Well, thank you so much, Mr. Pankaj, for joining us. So that was Keval Kiran Clothing guiding top line in the range of 15 to 18%. And over to you, Shreyansi.
Absolutely, and Parth, it does look like a strong set of numbers overall. Even when you talk about the guidance, looking like quite a healthy guidance as well going forward. Right. Thank you so much for joining us with that conversation also. So that was quite enlightening to say the least when you talk about Keval Kiran as well. But let's also move on to some more enlightenment and talk about a year of extremes coming in for gold prices as well. Let's talk about that as well in terms of what's been happening. So now when you talk about gold, it's up nearly 5% on a weekly basis. You're looking at it still down almost a fifth since the war has begun in late February as well. So you're looking at a little bit of tale of two triggers really coming in as far as gold prices are concerned. Let's also make sense of some of these and get you some more insights. In fact, NS Ramaswamy, Head Commodity Desk and CRM Ventura is joining us right now on the show. Thank you so much, Mr. Ramaswamy, for taking time out and joining us. As always, it's a pleasure to be speaking to you. But, you know, when you talk about gold as well right now, it's quite the interesting setup, which is why this makes this conversation so much more interesting, right? When you talk about the weekly basis, you're looking at a 5% gain. When you talk about gold thus far this year, especially since late February, it's down by almost a fifth. You did have that rally coming in January. But, you know, first things first, just wanted to get a sense of what you think about the week gone by first.
Yeah, basically gold's consolidation is almost come to an end and it has started to rise. That's what we have been observing, mainly through the Chinese demand, which is very strong, and also the US Fed's uncertainty. Basically, the US Fed is not at all in a hurry to raise the rates. If you were to see, the treasury yields are rising, and also the US dollar is a bit of weakening trend which has been observed. So Fed doesn't require any adjustment as regards the inflation. It's because it's behaving as expected. So the consensus is about 56% of the consensus is talking of only a 125% hike in the interest rate, which was during the year end, and this was expected. Almost two such hikes were expected. So what is really happening is July FOMC, post July FOMC, we have got only September. So now this is a lean period where the Fed related monetary policy is not going to influence gold. So this is the time when the geopolitical part of it is really acting on it. So the progress that has been seen in the Middle East, conflicts and the peace talks and whatever we are seeing on the oil prices is probably indicating that there is no much worry on the inflation side of it, which is giving a great support for gold. And central bank interest rate hike is also actually expecting only one such hike for the year 2026.
No, absolutely. And, you know, moving on, just also quickly wanted to try and understand if there's one interesting sort of statement that I found in some of the analyst commentaries as well, which is borrowed momentum is what they're calling it from the Iran talks as well. So how much of this week's rally do you think is genuine de-escalation and how much of it is just short-term technical buying then?
It is not. It's more of a technical, because we were all we always saw that gold had got a floor at around $4,000 in the COMEX level, and from that we were all expecting that probably the entire buying basket anywhere between 3,950 and 4,000 being a floor. We were expecting around 4,180 going to be a technical background which we can establish that the rally can begin. And then subsequent to that, we have seen that the consolidation phase has completely come to an end, and it is actually building up on the rally. So it's basically a combination of fundamental and technical. As I told you about the monetary policy part of it, we aren't expecting anything come till September. So all that is happening now in gold is this consolidation. Will that, after it has ended, will this rally cross the 4500 barrier, which is giving a positive trend from 4180? It is already crossed, and now today we are at 4350. So 4350 levels, or in MCX Indian rupee terms, 1,50,000, which has been crossed, which is giving a very, very great support and an indication that gold is going to rally further. So it's a technical combination as well as, and today, as regards the economic data, we have the non-farm payroll, which can further give you a sign of how weakening the labor market is. It will expect interest rate cuts, which would give supportive to gold and silver.
No, absolutely, and point taken there, in terms of the setup that we've got at hand. Let's also delve a little deeper in terms of this from a contrarian perspective right now, because we do have Naresh Kataria, private investor, joining us on the show right now. Mr. Kataria, as always, a pleasure speaking to you, right? And a very good afternoon. It is a very interesting afternoon for those who track gold prices, and especially for you, since you do have that little bit of contrarian view also coming in terms of some of your recent commentary that I'm going through. You've talked about how sentiment has also bombed out in gold in the recent months, and which is especially a good setup coming in from a contrarian perspective. Let's talk about that first, and then we'll get to the other insights a little bit later.
Pleasure to be here again, Shreyansi. So on gold, the sentiment is exactly opposite of what it is right now, is opposite of what it was in start of 2026, when there was mass participation and a frenzy or a euphoria. So right now, I think the flows into the gold ETFs, all ETFs combined globally, actually outflows compared to the flows which they were there in 25 and 26. The gold bull market, this leg started in 22 when the Ukraine war started and US weaponized USD reserves of Russia. I think that was the triggered by central bank buying. And then the retail joined in later via ETFs in 25 and 26. 24 and 25, sorry. But 26, we have seen outflows in all gold ETFs combined. And I think the correction has been run through enough.
No, absolutely, and that little bit of run through that we've seen, it's actually quite perplexing, to say the least, when you talk about some of those support and resistance levels being a little fluid when you talk about gold, right? And Mr. Ramaswamy, I also wanted to just take it across to you and try and understand what you think about the scale of this year's swings, which is just something we just talked about as well. Is gold still behaving like a safe haven asset, or something more speculative? And it almost seems like I'm asking you a rhetorical question right now, right? Given the way that it's been trading in a very different sense than a traditional safe haven asset would.
It's been very, very cautious move in gold. If you were to see rightly, like how the guest just now pointed out about the global gold ETF, what is very remarkable is about the global ETF. If you see, it has attracted actually almost $3 billion US in inflows in July. It has actually reversed the last 2 months of outflow. This is as per the World Gold Council's report. And also, mind you, that Indian physical demand is a season which really starts from August. So that's a festival accumulation which begins. So we expect that over the period of 2026, if the euphoria and things should, after it crosses $4,500 per ounce, we are expecting it to greatly rally even up to close to 4,700 levels. And that is what we are expecting by almost 2026. So it's not more of a speculative, but it is an accumulation phase which has crossed now, and the rally has bound to begin now after this fundamental impact on maybe the interest rate and other things. So we need to wait and watch till September, but by then we are expecting it would have already crossed 4,500 mark.
Absolutely, and we wait and watch, we will, because it's quite the interesting setup right now that's been unfolding when you talk about gold as well. Mr. Kataria, just wanted to get in a word here in terms of the ETF tonnage that you were talking about, for some more color on that as well. And when you talk about central bank buying, both of those triggers have been quite important in terms of what investors have been tracking. Your 2 cents on this.
So stepping back, if you see this gold bull market started this in 2022 when central banks accelerated their buying and retail were actually net sellers on ETF. If you see the ETF tonnage drop between 22 and 23 and then it picked up in 24 and 25, but central banks have continued to be buyers. They've been buying about 800 to 1000 tons a year. Annual production is 3700 tons. So central banks have been steady buyers. It is the retail and ETFs which took the gold market into, and silver, of course, into a different orbit in 2025. That over enthusiasm, I believe, has been removed, corrected. ETFs, there are no great total inflows. There's actually net outflows across all ETFs. So I believe the sentiment is well placed. Stepping back, also, Shreyansi, if you see, even in 2022, when the war started in Ukraine, gold initially corrected, like it's corrected now with this war in Iran, because there is a scramble for liquidity. If you see, even India's political leadership has advised Indians to kind of go slow on gold. Why? Because we want as a nation to save dollars. So there is a scramble for dollar liquidity. And I think that's what has prompted the correction like it prompted in 2022. Just one more point on the last bull market, which was 2000 to 2011. Even within that, in the 2008 market correction, gold had corrected 30% in 2008 from the peak. And then, of course, it tripled from that level. So if there is economic dislocation, if there is a scramble for liquidity, gold also initially takes a hit on the chin. And I think this is what has happened.
Absolutely. And Mr. Kataria, just a quick follow-up question when it comes to central bank buying, right? Do you think that there's the pace, does that worry you a little bit in terms of how that seems to have reduced just a tad bit? Because in 2025, that seemed to be all you were hearing about gold, right? And that was definitely a key feather in its cap as well in terms of the tailwinds. So what are you thinking about the pace and in terms of central bank buying in 2026?
So I believe more than the pace, it is the press coverage which has come down more. 25, they bought about 1000 tons. I think the H1 of 26, they bought about roughly 400 tons. So yeah, it's reasonably good buying compared to pre-22. Pre-22 average was about 500 tons a year. And I think the pace is, of course, they are also very cautious buyers or very selective buyers. And prices went up all the way, so they slowed down. And the Q2 buying has been in quite good. I believe they are the key players, they are the key insiders, if you will, in the gold market. And because their currencies are competitors for gold. Gold's competition is other currencies. And if those insiders are buying, then obviously it's saying something on what they think the reserve currency setup is moving towards.
Absolutely. And, Mr. Kataria, I'm tempted to say that don't shoot the messenger. But then, that is actually true, right? In terms of central bank buying, we've seen a massive change in terms of the way that it's been reported, be it through the sheer scale at which we saw coming in 2025, of course, was a very important landmark year for that as well. But Mr. Ramaswamy, I wanted to also talk about the Strait of Hormuz talks as well in terms of the collapse. How fast do you think gold could, retest some of its July lows as well, if there's bad news coming in from there? Because you do have this technical breakout. Some of those levels are very closely moving in line with President Trump's commentary as well.
Yeah. If you were to see what's really happening in the Hormuz is that despite these diplomatic progress that we have seen, only 2 vessels have actually transited the Strait of Hormuz. This is a report which came up yesterday. And if you were to see, it is well below the pre-February period where average that was 130 or 140 ships which were going. So despite diplomatic progress that's happening, despite peace talks which are being discussed at this point in time, and crude hovering at around 77.5 WTI, which I mean, we are expecting again a slight bullishness is still witnessed. We can see it expecting to even go to around $85 back again. So crude oil is already declined 10% this week. If you were to see due to as the geopolitical tensions in the Middle East has shown some signs of easing in MCX, it showed some corrections but then it is sideways to bullish is what it is. We aren't seeing any great reversal in the crude prices. We are seeing it in the range, and probably 85 can be witnessed maybe in a couple of weeks.
Absolutely, and that's definitely something that we're looking at, right? Mr. Kataria, just very quickly before we let you go, just wanted to try and get a sense of everything that we've talked about thus far. It's been some interesting data points, right? Be it ETF tonnage, central bank in terms of the reduced pace, but still some bit of intent very much there. And of course, the sentiment in terms of it being a contrarian perspective as well. Just quickly wanted to get a sense of if there is anything else that makes it to your radar in terms of key interesting data points to really watch out for. Anything else that you're really reading between the fine print for when it comes to gold?
So the two more things I look for gold closely. One is the direction of interest rates. And interest rates going up is a headwind for gold because gold is an asset which does not yield anything. So gold does well when central banks are cutting rates or the rates are going down, and rates are actually going up now. So I'll watch for central bank rate behavior and also overall treasury bond yields. And if they go up further, then I think it's a headwind for gold. And even if I see that gold is in a structural bull market and we had a healthy correction in the first half of 2026, gold as an asset class has become much larger. I think the total value of all gold in the world, because everything mined is retained as an asset, it doesn't get consumed, is about 24-25 trillion dollars or thereabouts. It's a very large asset in absolute sum. So I don't think I look for this asset to be a multi-bagger. It's a very good ballast or a very good diversifier for portfolios. And we've had a good setup in terms of a healthy correction. And I hope that the bull market, which started off in 22, continues.
Absolutely. And Mr. Kataria, multi-bagger, perhaps if your time horizon is decades instead of years, right? Because if you look at a longer time frame, it's given stellar returns. If you look at a short time frame, barring that 2025 exception, you might stand to get a little disappointed. But divestment and diversify indeed. But lastly, Mr. Ramaswamy, just wanted to get a sense in terms of what single data point this week would really be convincing you that the rally has real legs, or if there is anything at all, be it this week or any other week, that is giving you that little bit of indication that consolidation, that range-bound trade, that disappointment when you take a look at your gold holdings, that's going away right now.
No, this data point is supposed to be today, as I just now commented.
Yes.
It's the non-farm payroll report which is expected today. And also on August 12th, we have the CPI Consumer Price Index, which is also a key event which has to be seen. So besides that, these are the only 2 points other than the geopolitical news that will come up. So one has to be keenly watching on what is coming up on the non-farm payroll data, which will probably influence the Fed's policy for the month of September. So initial jobless claims have remained broadly unchanged. So these are one triggers which can give you direction for the US dollar as well as gold. So we aren't expecting any much data other than these two.
Thank you so much for taking time out and joining us. It's very clear that, nothing thus far, but it does definitely have potential to really just surprise us with that rally that seems to be building up, at least when you take a look at the charts. Thank you so much, gentlemen, for taking time out and joining us this afternoon. Let's also move on and talk about something like an e-clerks as well that's very much in focus, as the company has reported a rather healthy set of numbers in the first quarter. Revenue has risen sequentially, net profit is up about 16%. In fact, we're joined by Srinivasan Nadadur, Chief Financial Officer at the company as well, to talk to us a little bit more about the numbers. Thank you so much for taking time out and joining us. And firstly, a very good afternoon to you. First things first, just wanted to get a sense of your outlook when it comes to the CC growth as well. What kind of estimates do you have in mind there?
So thank you for having me on the show. And yes, it's been a good quarter. Revenue growth in US dollars terms was 2.8, and growth was driven primarily by the emerging business as well as in high tech. Some of the AI related work that we won last quarter, we've started delivering all those. There continues to be a lot of pipeline, both AI and non-AI related. So I think we are quite positive about the future.
No, absolutely, and it does look like you have every reason to be when you take a closer look at your numbers as well. Just wanted to try and get a better sense of the segments or the key triggers that you have leading your growth story at this hour.
So as out of the 5 industries that we report for the last 4 or 5 quarters, the emerging has been doing very well. I think sequentially double-digit growth for nearly 3 or 4 quarters now. This quarter, high tech has also done well. So some of our clients are embarking on large transformation projects underpinned by agentic AI. We won a couple of deals there in the last quarter, and some of that has started to get delivered in this quarter. So that is also responsible for growth. BFSI and retail, fashion and luxury a bit flat, but we expect that it will improve in the coming quarters.
Absolutely. And speaking of the high-tech segment, that contributes about roughly 16% to your revenue as well, coupled with BFSI and CMT, that makes the lion's share of your revenue. I'm just trying to understand here if you foresee that mix also changing, or do you suspect that it's going to continue on similar footing going forward?
The mix might change because we are having a lot of pipeline in emerging, so that I think the mix has already changed if you look at in a 4-quarter window. So it is possible, depending on which segments grow, the mix could change. Right now, we think emerging will continue to do well. We think high tech will continue to do well. Manufacturing and distribution and retail are a bit soft because of the conflict in the Middle East. They are pushing decisions and postponing decisions. So we expect that there may be slight changes to the mix in the next 2 or 3 quarters.
No, absolutely. And a very, very quick yes or no answer, if you will, in terms of deflation from AI, is that something that you're noticing on the ground then?
Not at the moment, no.
Not at the moment. Okay, got it. Thank you so much for taking time out and joining us this afternoon. So there you go. That was eClerx Services after a very healthy set of numbers. When you talk about their revenue mix, they do suspect that that's going to change. But going forward, some of their guidance and growth triggers do remain the same. That's all the time that we have on the show for now, though. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया है बैठ सकता आपके साथ, खाइए ना प्लीज। आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे?
Hello and welcome to Small Cap Bazaars on NDTV Profit. I'm Hiral Dadia. Now, one stock that is in focus, Lupin, that has reported numbers in trade. In fact, let's get in Ramesh Swaminathan to talk to us about the quarter gone by and what's the outlook looking forward. Ramesh, welcome to the show. Always a pleasure to speak to you. You know, always under-promised, over-delivered. That's what I would want to say, because you've given a guidance of 25% for FY27, but you've actually achieved 30% in the first quarter of the year. Does this mean you will need an upward revision in terms of FY27 guidance?
Clearly, we've done very well this quarter. There has been secular growth across various markets. In fact, no geography is left behind. We are pretty pleased with that. Products like Tolvaptan and the base business in a general sense in America has certainly delivered. There is, of course, competition which has come in for Mirabegron. And there's also a cost of additional cost in terms of what we need to pay for Mirabegron itself. We do believe, that there would be more competition coming in for Tolvaptan. So that is clearly, that would actually have an impact when it comes to the overall profitability, because America is a very important geography for us. Whilst there is secular growth, there is also the dark clouds in terms of, cost pressures. Essentially, the geopolitical tensions and the war has costed us a bit. There have been, of course, some inventories which are built over time, which is, and the full impact of, in fact, this price rise that I'm speaking about will potentially be felt in the next 3 quarters. The cost of logistics, both air freighting as well as ocean freighting, has gone up in recent times. There are dark clouds. So I would rather stick with, in fact, the guidance of, 25%.
Okay, we'll stick with the guidance of 25%. Then does that mean for the rest of the year, the company will do probably the 23.5 kind of an EBITDA margin?
Well, clearly, the math would kind of suggest that, right? So it's a play of mathematics. And I've just told you the reasons why. I just wanted to be clear about where we stand on this.
Okay, so absolute play of mathematics is what Ramesh is saying. But Ramesh, what about, you mentioned about Tolvaptan and Mirabegron, where headwinds have started to come in. And, Spiriva, where you were expecting competition as well. So what's the update on that front and the kind of pressures that could come in?
Well, Mirabegron, there's already competition, so Amneal with, in fact, MSN combination have entered the market. When it comes to Tolvaptan, I do know that there will be at least 3 to 4 players coming in at some point of time. There's, of course, a question of, whether they've got their REMS Act right and the like. But I would rather be cautious in my overall estimate of things for the future. And the cost pressures are what they are. So clearly, that's the reason why I'm cautious about the future.
Okay, so competition is what is making you cautious when it comes to the future as well. What about Spiriva? If you could help us understand that, because time and again, we've mentioned about competition coming in, but not yet come in.
Well, it is what it is. Essentially, it's it's a good product, and there is no competition as yet. But at the same time, we stand by our guidance.
Okay. When are you expecting price erosion in terms of the quantum? So by when do you see that coming in, and what's the quantum you're expecting?
No, clearly we have factored in all of the the factors that I spoke about. There is the cost of freight, and there is the cost of various elements that have gone up in recent times. The geopolitical tensions are what they are. It goes on and off. So there are several moving parts out there. But price rise is a certainty that everybody would certainly have felt, and clearly, it doesn't work for us from that perspective, the industry that is. So it's better to be erring on the side of caution.
Okay. What about on the top line front as well? The guidance given is what, high single digits, Ramesh, in terms of overall sales. You've done 32% already in terms of the first quarter. So do you think that would need a guidance revision? And if not, does that mean slowdown in terms of growth is what everyone should anticipate for the remaining quarters?
Yeah, that's what it is, right? I just told you about the fact that there is going to be competition in America for the couple of products that I spoke about, so whilst we would be, still, it will not necessarily be the same 370 million dollars on a quarterly basis. There could be some downward revisions to that. So there are, of course, prospects. So we have, in fact, biosimilar products and the like. There is secular growth in other parts of the globe. India has done spectacularly well. We're hoping that we will be able to kind of continue sustain this kind of and we always guided for 20 to 30% or rise over the industry in terms of a market share here. Clearly, we've done well. So but at the same time, it's better to err on the side of caution.
Okay, so again, tread with a sign of caution is what you're talking about. The other thing is, in the fourth quarter of FY26, you had indicated that FY27 could still remain $1 billion plus US franchise, and this is despite tolvaptan and mirabegron headwinds. So after the first quarter, are you seeing that objective which is still achievable?
That would indeed be the case, about $1 billion for sure. And we already are looking at 28 and 29 and so on as well. Still remain confident about growth prospects for the next year as well, given all of this.
Okay. And how should one actually think about biosimilars that you're mentioning about as a contributor over the next 2 years? Because you've indicated earlier that FY27 actually would have been the beginning of the US biosimilar launch journey.
Clearly, we are optimistic about our future. We're wanting to expand our capacities in this, and biosimilars is a platform that we're looking at for the other countries as well. So there are prospects with a number of products. So we have etanercept, which has been there in the market for some time, ranibizumab, PEG-CSF, and a few other products that we have been working on.
Okay. And how optimistic are you about Simanext at the start of FY27? Because that was the optimism that you showed at the end of FY26. And after one full quarter, what has been the response? And are you still on track to become a top 3 player in terms of branded generics, semaglutide?
Semaglutide, we have done very well. So we remain the top player in this. Our prospects in GLP-1 would remain pretty good, given the fact that we have a pretty good franchise with in the diabetes space with doctors. We've also got into a relationship with Ganley for bofenglutide, which would be launched in India about a year and a half later. Clearly, that would improve our overall prospects. Very bullish about it in the long term. Whilst I'm also conscious of the fact that the semaglutide market is a little subdued at this stage. The initial, exuberance, is a little mellowed right now. But clearly, we think that the prospects for the long term are very good. And that's going to be true with, in fact, the therapy areas that we are focusing on: cardiovascular, diabetes, respiratory, GI. All of these therapies have done fairly well, very well, actually.
Okay, so diabetes, cardiovascular, these are a few of the aspects you're watching out for. And very lastly, Ramesh, my question is, in the next 3 years, what is going to be that next major growth driver for the Indian markets?
India, so we are looking at, in-licensing opportunities. So, so we're also looking at, in fact, seek and develop. bring in products from China, looking at phase 3 development in India, trials in India, and eventually bringing it to market. So we would like to grow our specialty business in India over time, which will give us, in fact, moats vis-a-vis the competition, make us pretty, very differentiated from that perspective. We could look at similar strategies for the rest of the world as well. And equally, when it comes to the rest of the world, we have, in fact, our forays into Aftal. So that's the specialty business that we're building in Europe for the current, but clearly looking at the rest of the globe as well. So India, of course, is going to be a big, thrust for the future, a trigger for the future. And I would expect, the base products plus, of course, the forays into specialty to pay off in other parts also.
Specialty portfolio in the Indian markets is the growth driver. Thank you so much, Ramesh, for joining in. Always a pleasure to speak to you as well. The stock seeing a mild recovery from the day's lowest levels as we speak. But Deepak Nitrite, that's another stock to focus on in trade on the back of earnings. In fact, my colleague Neeraj Shah, who's in conversation with the management of Deepak Nitrite, let's go across to Neeraj. Over to you, Neeraj.
Thanks a lot, Hello. And yes, let's welcome in Maulik Mehta of Deepak Nitrite to talk about how the quarter went by. Well, it was the highest ever quarterly performance. So, Maulik, welcome on the show, of course, but I'm presuming that there is no reason for you to be unhappy. Is this the start, though, of something durable, or is it difficult to call that right?
So, first of all, Neeraj, thanks for having me. And no, I'm not at all unhappy. This has been a good quarter. It has been a testing year last year, but I think that the thesis that we've been proposing for a long time is actually starting to play out. One of the reasons the previous year looked weaker than it should have been is because our downstream assets got commissioned earlier than our upstream assets, which meant that we worked to see how to commission our downstream assets and put the product out in the market. But we were constrained with regards to the margin profile because we were forced to buy the intermediates. Now this gives us the dual benefit of being present and placed in the market, as well as having our upstream intermediates come in to give the margin kick that we were so hoping to get earlier a few quarters ago. Now, in terms of whether it is durable moving forward, look, one thing that has happened over the last one quarter, say since March, is that there has been a major upset with regards to not only raw material availability, not only manpower availability, gas availability. All of these things have resulted in a distorted outlook for the entire sector. So it is the right question to ask. Now, where I feel confident is from the angle of looking at Deepak as an integrated manufacturer. Many of these assets independently may or may not have made sense. A nitric acid plant on a standalone basis may not have made sense, but for Deepak it does. MIBK for an independent manufacturer may not have made sense, but I'm sure there will be a follow-up question that someone may ask, these margins look great because both phenol as well as acetone were in short supply. What they will not ask is whether propylene was in short supply. But since acetone was also in short supply, prices spiked. And what happens when things normalize? When we have a large and integrated base and multiple downstream assets in line, that allows us to smoothen out these volatilities that would otherwise plague a commodity chemical manufacturer. So these assets allow us to get the kind of margins that would otherwise be reserved for someone who would be a spec chem company, simply because we have much more dominance and control over our own feedstock and intermediates.
Got it. Okay. Maulik, so can I ask you if the current Deepak does it become a larger jet plane that can navigate through turbulence better, despite China dumping, despite geopolitics and raw material pressures?
So, Neeraj, one thing that we've done is our base assumption is that China will dump. Now, everything starts with that baseline. What is working in our favor, and I would say partially structural also. Couple of things. One is that India
the home advantage is the anchor. Export opportunities are the force multiplier. Over this period of time, what has happened is that you've had freight rates going through the roof, insurance going through the roof. And generally, even when all of these things were normalized, over the last 5 years, one witnessed that when Deepak came in with phenol capacity and kept on expanding, the downstream consumption activity and investment expanded even faster. So our ability to be able to capture this home advantage meant that we had to run as fast as our customers to make sure that we maintain wallet shares in an expanding universe. All of these things like insurance, freight, depreciating currency, geopolitics, etc., they don't reduce the capacity threat from places like China or East Asia, but they increase the cost of delivery to customers here. And Indian customers are famously frugal. They want to have short cash to conversion cycles. They want to make sure that they are able to push their product out without building high cost inventory. They are able to ensure that they are not impacted by volatility, but the nature of the industry is volatility. And a company that can give them that sense of security is a company that they will always give the lion's share of their consumption to. So when Deepak is expanding into products which are downstream, we've specifically chosen products where India actually does not have a very large manufacturing base, so we are not competing with our customers. We got into specialty solvents specifically because no one else in India does. MIBK is a downstream of acetone. We commissioned that just very recently, yesterday, in fact. And we are already at a point where we're confident of having best in the world consumption norms. And it is our own acetone that is the feedstock. MIBK as well as MIBC, in line with the customer requirements, will immediately be able to go past 100% asset utilization as the demand picks up. So from our operations side, there is nothing which is holding us back. The feedstock is our own. And this integrated model will allow us to answer those questions about the kind of volatility that one might be considering in anything which is a quote unquote commodity play.
Malik, you'll have to hang on. Sorry, because I need to go across to my colleague Somit because State Bank of India numbers are out. Somit, over to you.
Come in right now, and what we are looking at, if you look at the net interest income, that has come in at close to 46,992 crore, and which is a growth of nearly 15%. Now this is slightly above what the street was anticipating at close to 46,214. The net profit has come in at 21,000, much ahead of what the street was anticipating at 19,000 crore rupees. Provisions have increased on a sequential basis at close to 76% to close to 5,047 crore. The GNPA number, that has come in at close to 1.47 as against 1.49 that we had seen in the previous quarter. NNPA stands at close to 0.38 versus 0.39, so nothing much of a change on that front. But yeah, a big beat at least on the NII front and the profit number, but significant concern when it comes to provisions that have increased by 76% on a sequential basis. The stock is gaining up around 2% on the back of a significant beat that we have seen on the NII front, 15% up on a YY basis. But let's get in Piyush with more details on SBI here. Piyush?
Yeah, that is right. Strong set of
Yeah, strong set of numbers, actually better than expected. The profit is up around 10 odd percent. According to estimates, it was supposed to be a degrowth YOY of 1%. NII growth is strong because the interest expense have actually grown at a slower pace than the interest earned. Interest income grew 8.5% and interest expense was up only 5.2%. The provisions, like Somit rightly mentioned, have risen quite sharply. If we see provisions are up 76 odd percent. Now, of course, we'll come back to you with the net interest margin numbers, which are not present as of now. But what will be crucial is, of course, the guidance on margin, further the amount of provisions that the bank has to make to comply with ECL norms, and of course, the amount of deposit it has garnered under the RBI FCNRB deposit scheme.
Right. So we'll be still waiting out for the net interest margin number. The slippage number that has come in, that is still awaited. So the press release will give us more details on that front. So far what we have is the net interest income, which is up nearly 15%. Net profit, it's a beat. The stock is up nearly 2.5%. GNPA. Now, Street was expecting this to be around 1.57, but it has come at close to 1.47. Let's welcome in Parag Thakur, the head fund manager with Fort Capital. So, what is your first look? What does the number look like? It seems like a beat that has come in on the NII and the profit number front, but increase in provision, is that a concern?
No. The increasing provision is not a concern. I think the numbers are looking great in terms of NII growth and profitability, all fronts. And that is why stock has also done very well in last 2-3 days, because this was widely anticipated also. But I would keenly wait for domestic NIM number and the global NIM number, which has not come yet. But asset quality, growth, everything looks absolutely fine.
Sir, if you look at the NII number, it has increased much more than what the Street was anticipating. As per you, what could be that alpha factor that would have aided SBI in this quarter? Anything that you could understand from here?
No, see, the low credit growth in the system was very good. So that was pointing towards that SBI being a largest lender, the credit growth would have been really good. YOY, it should be above 16%. The NIM number, we will have to see exactly. But it seems, from the look of it, that NIM has also bottomed out in the last quarter and has improved QOQ. That is the first feeling which I can get, but I am not sure about the real domestic NIM and global NIM number yet.
As per you, sir, would be the good NIM number for SBI at this moment?
So I think 2.88% if they deliver on global side and domestic NIM 3%, that should be a good outcome.
Right. Well, thank you, sir. Thank you for joining us and giving us your perspectives on the perspective on SBI. So 2.88 on the domestic side, on the global side, and around 3% on the domestic side is the NIM number that would be good for SBI. The stock is up 3%, strong beat coming in on the NII and the net profit front. Still awaiting the net interest margin numbers and the slippage numbers. The slippages seem to be around 7,046 crore rupees. Now, this is yet to be disclosed. So, as per one analyst that I'm picking up, slippages seem to be around 7,046 crore. Is what I'm picking up here right now. But again, we are still awaiting the net interest margin number. If we could get someone from the Piyush or someone from this to give us more details on this. So yes, provisions stand at 5,000 crore as against 2,872 crore, and that's an increase of 75% on a Q-on-Q basis. Profit is up 10% at close to 21,000. Operating profit has also beaten the analyst street estimates. 30,000 crore was the expectation on the PPOP, and the operating profit has actually come in at close to 33,000 crore. So significant beat across all numbers is what we are picking up so far when it comes to SBI. Still, the net interest margin number is not out, but as per analysts, 2.88 on the global front and around 3% on the domestic front would be a good number. But let's get in Piyush to understand if there have been more details that have come out when it comes to SBI. So Piyush, anything on the net interest margin?
So Amit, we are waiting for that number to come out, but like you rightly mentioned, slippages have risen to around 7,046 crore, which is slightly higher than anticipated, because in Q1 banks also see the seasonality effect in their agri portfolio. So this was flagged by analysts, and SBI has done that. Further, if we see the gross and net NPA ratio also have come down. If we see on a sequential basis, 1.47 in this quarter versus 1.49%, the GNPA ratio has come down. Net NPA ratio mostly is flat at around 0.38%. Essentially, the profit seems to have been driven by the strong growth in net interest income, like we mentioned earlier. And the key monitorable, of course, remains the margin number. We are, tracking this counter, and as soon as it's out, Somit, we'll have more details.
So slippage could be one of the concern. It's more than what the street was anticipating at 7,000 crore rupees, and we are seeing a sharp pullback on the stock as well. Not much, just some of what from 3% has come down to now 2.5% in trade. But yes, overall on all the other fronts, be it the operating profit, be it the net interest income, be it the net profit, the bank has beaten the street estimates. In fact, the GNPA and NNPA are also much better compared to what the street was anticipating. So yes, a good set of numbers on all fronts, but slippages is one concern, and net interest margin is a number that we are still awaiting and we need to watch out for. Well, that's all we have on this edition of Small Cap. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact. The GIFT City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at GIFT City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm...
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next few minutes, we will start taking all your stock-related queries as well. So it's been an interesting session this as well, and you can see the big numbers that have come through right now. And SBI is definitely the one that I'm talking about. The index is around 70 points down as well, but SBI, you saw that a sharp uptake of 3% on the back of earnings. You've just gotten the press release that has come through as well. The domestic NIM number has come in at 3%, which is up 7 basis points compared to quarter 4 of FY26. The whole bank NIM has also come in at 2.86% versus, and has improved actually by 5 basis points compared to last quarter. So net profit at 121 crores continues to be a good number that has come through. And NPAs, both the gross as well as the net NPAs, have gone down, and hence you're seeing that stock react positively at this point of time as well. Now, of course, we will be cutting into the press conference for the company. That'll be in the next 15 minutes. So we will take your stock related queries now, as well as the rapid fire session also early on, to address as many queries as we can. So right now is the time to pick up your phone, send in your WhatsApp related queries, as well as call us for those stock related queries as well. But we spoke about the Nifty. Let's also look at the heat map also very quickly for the Nifty 50 as well, because Bajaj Finance as well as Shriram Finance were a couple of names that were dragging the Nifty down today, led by those new regulations that could come through, and hence Bajaj Finance now down 5.5%. You also have the twin Bajaj Finserv down 4.07%, and Trent has given up some of its gains that came through before the earnings for this particular counter. ICICI Bank and Jio Finance are some of the other losers today. So the banking and the financial pack definitely taking it on its chin. But it's SBI. SBI is up 3.5%. It's now the biggest gainer on the Nifty 52, and single-handedly getting the banking names back in focus. Sectoral heat map also very quickly. You'll see the PSU banking index up and about because of SBI as well, while we see the other constituents also. So Nifty Auto is up 1.7% as well. Private bank down almost